Hey, good morning, everyone. It's Monday, March 20th, and today is the second last Reddit talk we'll be hosting ever, Wall Street Bets. That's right. Reddit is shutting down the feature tomorrow on GameStop's earnings. I know, very sad. So we'll be hosting this Reddit talk until 9:30, and then we'll all shift over to Discord, where we've been hosting talks for the past week or two. And then tomorrow we'll be hosting another talk, and we'll try and go for maybe 24 hours. Hold through the GameStop earnings, talk about those, and then I guess get shut down when Reddit shuts all the Reddit talks down. But it'll be a good time, and we'll move on over to Discord. But it will have been a very good year and a half long ride. So thanks to everyone for tuning in, and let's kick it off. Let's talk about markets today.
Well, who else got exercise on their Credit Suisse puts, right? Very nice, very nice.
You were short those puts, Scald?
Yes.
Oh. Hopefully not too many.
Good morning.
Morning, Krusty.
Okay, I had a quick question about the announcement this morning. So this is the last Reddit chat thing talk for everybody.
Second last, but yeah, on the 21st, they're shutting down the feature for everyone, every subreddit.
Should we all not just like stop using? Isn't that like taking away freedom? Okay, never mind. That's a different topic. Thanks for letting me bring that up. Thanks.
Yeah.
Lick it, Reddit.
Did you say lick it right?
I think you said lick it, Reddit, but yeah.
All right. Well, I mean, that's why we're moving to Discord. So join in the link below so you don't get lost. But yeah, I mean, lots of interesting stuff happening in the markets actually. So I'm not saying that's
Yes.
theory.
Yeah, I think so. Look at the SPY is currently trading at 390, give or take. It's been bouncing back and forth. Obviously, I'm on Tokyo time, so I've been watching.
Hi, can everyone hear me right?
Yep.
Yeah, so I was wondering, what do you think about Credit Suisse's...
Hey, turn off the saw in the background. God damn.
Is there a war? I'm not sure if he's in
So-
Ukraine and where he's at right now, but...
Hold on. He was asking about what we think about Credit Suisse, and then someone interrupted. What were you saying?
Well, he's really loud.
Sorry, mate. I'm on a bus, if that's okay.
Fine. What was it you were asking about Credit Suisse?
Yeah, what do you think the future prediction would be? Like, do you think crypto will go back up with the fall of Credit Suisse and SVB?
I think it could go up or it could go down. The
Why so?
reality is the dust hasn't settled, so there's plenty of uncertainty going both directions.
So, I was just saying because everyone's having fears about with the financial crisis and shit. So most people would rather go to crypto now than SVB and other lenders as well. So, you know, what do you think about that?
I mean, if I could chime in here for a second, it's important to note that Satoshi Nakamoto, this is why he made Bitcoin. Literally the 08-09 financial crisis and ensuing bank failures of over 134 banks is the reason he made Bitcoin, right? So, I mean, yeah, it's on brand.
Yeah, that's all my question was. Thank you so much.
That bus sounds like a missile's locked onto it.
Yeah, Hardy, I know you want him to ask questions, but for anyone wearing headphones, I just want to apologize in advance. We didn't know we was going to have a chainsaw bus today, but I digress.
Should we just go down the line and ask everyone for their plays? Should we just do that? Should we fire that up?
Yeah,
I mean, I know Hardy has quite the list. What was that opinion?
I'm about to put my plays on the chat. Just it's a little slow this morning.
Oh, no, I hear you, man. I'm moving slow myself.
There we go.
Brad, what's going on in the world of uranium, buddy? Tell me about it.
What is there to tell?
What about the world of ape?
Again, what is there to tell? Nothing's really changed.
Come on, it's a precious metal. It's supposed to be an inverse play for the stock market going down.
Ape?
I don't think uranium's a precious metal. It's an industrial, I don't know, material.
Technically it is, but I won't correct anyone over here.
It's an underpriced electrical rock, right? I guess is the
It's a
easiest way to
fuel.
put it. It's fuel. It's underpriced fuel. We'll go with that.
Man, now I want a ring made out of uranium. I mean, it'll be pretty heavy, but it'd be pretty dope.
Well, you can just have a very thin band set inside a really large brick of lead.
Okay, I just want to say that it is never mind. It is a base metal, just for the record. But I won't be technical here.
Or you could opt for an ore scald, so it's not as dangerous. I've got March 24, 1850 calls. The calls left over from the strangle I bought maybe 2 weeks ago now. The puts went up 2.5 times, so they paid for the calls, and I have a little extra on the top for myself, just as in case things go tits up.
I've got some calls on GameStop as well. Can't remember off the top of my head what the expiration date is. I'm driving right now, so I'm not in front of the computer. But yeah, I've got calls too, and I've got calls expiring on Friday for SPY at 420 strike price.
I'm sorry, you have 420 calls on SPY for this week?
I do.
That's dope.
I bought them for 2 cents, so it was more of a lottery ticket.
Same here.
So there's plenty of Trust Me Bros stories saying that the Q4 will be profitable, or at least show a small profit. Expectation right now for Q4. Expectation is minus 13 cents a share, or 13-cent loss per share, and 2.1 billion in revenue. So we'll see to what extent that is that's even correct. Either way, the $18 put calls that I have should be enough, so that in the event the price rockets to 24 or even higher, we'll be sitting pretty. As always, Moasis is tomorrow. Which makes sense. So effective net revenue decrease, net of inflation. All the more reason to be.
Yeah, there's also talk about how the bank failures are bullish for GameStop. I personally can't figure this one out.
The reason why it's bullish, Scald, is the short position that the banks are underwriting or holding on their books as an unrealized loss will be forced to be realized. And that's what makes it bullish for GameStop.
Oh. Now, that's the first time someone's explained it in a way that made sense to me. I've read a few things about it, and I'm like, I do not know what these people are jabbering on about. But thank you, Hardy. That makes sense.
Scald, you have to understand, if the entire financial system collapses, the shorts will have to cover, and then GameStop will be worth $1 million a share, and you'll be good.
In theory, yes. In practice, it's entirely possible there will be some shenanigans because this is a financial product that got out of control.
Especially when Scald starts offering his non-synthetic GME shares secured only by crypto, and then people start using them to locate, even though I never bought a single stock. Just saying.
It's only fraud if you get caught, right?
No. It's only fraud when you're convicted. So you still have a chance if there are plenty of lawyers backstopping you.
Thank you, Hardy. I stand corrected.
So broadly speaking, I've been keeping an eye on the tech space, QQQ. NVIDIA and other chip companies are especially interesting because it's unclear where their additional revenues or margins are coming from. Crypto mining is no longer demanding nearly as many GPUs as it used to. Gaming demand has been about the same year over year. And enterprise sales are down dramatically. Not many new data centers are being built versus 2020. So it makes you wonder how you can expect 24 to 30% growth in the face of those headwinds. So I'm thinking NVIDIA is already overbought, and so have medium-term puts against them, assuming my entry prices are hit.
Hardy, you just woke me up out of my slumber, man, with some NVIDIA talk. I brought it up last week. I'm bullish NVIDIA long term. I have leaps and I own shares. But I brought up NVIDIA and I proceeded to get my dick bit off by rabid bears from like all angles. I had two questions for you today about NVIDIA. Now I just heard your play on short term puts. Do you own calls for NVIDIA?
I do not. Keep in mind, the vast majority of my trading is based exclusively on some form of volatility expansion or contraction. If the price happens to move in my favor, then that's a bonus.
Okay. I follow your community. I'm a little bit older, so I'm not on here as much. But I've noticed that there's a lot of people on the other side of the trade there for NVIDIA that are short. And there's opportunities. I've held this stock for about 10 years, so I've seen the ups and downs, and it just the way it trades historically. I think there is some money to be made on the short end for sure. However, I'm bullish based on the fact, the runway and the opportunities that they have in front of them. GTC, their developers conference starts this Tuesday, I believe. So I would encourage your listeners to tune in and see what kind of opportunities are ahead for NVIDIA. The other thing I got for you guys today, and then I'll jump off here.
If I may jump in, Jody, if you could perhaps post some due diligence to WallStreetBets or post some resources down in the chat, I'm sure we'd love to go through and pick it over.
Thank you, sir. Yeah, I have. And it's, dude, the amount of people that are on the other side are immeasurable. I mean, there's a lot of people that are on the other side of the trade, but I'll do that. I'll take your advice and do that. The other thing I have is I'm looking at target calls. I wanted to ask you about, Hardy. I think it was April. I'm driving right now. It's an April expiration, but I'm looking at the target 170 calls. Pretty cheap premium. And I'm also looking at Enphase. I forget, there was a bank that upgraded them today. I'm looking at calls for them probably, a couple months out. I wanted to ask you if you own any Enphase calls or Target calls. That's all I got. Thanks, guys.
Target, I have short-term puts. They're running up against delta neutral. So it's considering the environment as of late. I'm anticipating delta neutral to be a ceiling, not a floor for target. End phase.
I actually have some end phase calls. I had them last week. I had a target price of 210. Good morning, everyone.
I would want end phase to cross above at least 210 before I'd consider it a buy. Like, it looks like a good mean reversion play, but at the same time, this level of move could be some form of regulatory pressure or market pressure. For example, microinverters are less efficient than mini string inverters, or dis string inverters might be the new hot product instead of microinverters.
Do any of you guys have solar on your home? I know it's off topic. I'm looking into it.
So I've priced out the cost of solar here in New York for me, and the fact I'm in an apartment notwithstanding, I'm using I would need on the order of a 13 to 17 kilowatt system, and something on the order of 30 to 35 kilowatts of battery storage to handle some of the weaker periods or production. Altogether, if I were to buy the parts and install them myself, so basically labor is free, I'd be spending in the neighborhood of around $20,000. And the payoff, based on the prevailing 30 cents a kilowatt hour, would be something like 15 years, which is beyond the warranty of some of these materials. I get the impression, at least for me up here, the spread between the cost of generation and storage as well as my own utility cost would need to be at least 50 cents in order to justify the investment.
Yeah, you really broke that down, Hardy. Yeah, I mean, I was going to say, I know that the panels will pay for themselves over time, but it's like a long term, like 15 to 20 years is what I've heard just from chatter about people that own solar panels.
So that 15 to 20 year payoff, let's say 20 years to make the math easy, implies 5% return on your original investment, right? So you put up, let's say, 10 grand to put up the panels, so you're making, what is that, $500 back every year.
Right.
Well, or for that same 10 grand, I can buy treasuries at 5% and enjoy that instead.
Yeah. There's always a trade, I know it.
Well, we are Wall Street Bets.
Less work, more payout.
I don't know if it happened in the U.S. at all, but I know I read an article a while back. They had a problem in the U.K. where people weren't being able to sell like their houses or their flats because they had done this deal with the solar company where, oh, we'll put the solar panels on your house for free. Oh, but by the way, we get the rights to the power for the next 15, 20 years. And so none of these banks wanted to give people loans to buy these houses where they didn't have the rights to the whole house.
Yeah, you had to own the panels out front. I think if you're renting or leasing the panels, that's when you got in trouble on the real estate side of it.
So keep that in mind, anyone who's looking at getting solar for themselves.
I got a couple plays I could tell you about.
Yeah.
So I got a calendar spread on JP Morgan, March 31st and April 6th expiration. Puts on JP Morgan, April 14th expiration. And then last but not least, lottery ticket. I got a call on SI, May 19th. That's it.
SI call seems a little ballsy, doesn't it?
Yeah, I figured what the hell. It was cheap, why not? Total 8 move.
Speaking of, risky contracts that most likely will never pay out because they were cheap. I can't remember the strike price or the expiration date. I remember the strike price. I know it's like April. I want to say like 13th or something. 50-cent call on MULN. It's a micro cap. One of the guys I work with is a huge fanboy for them, and he will show me that stock on a regular basis. Right now, it's pretty downbeaten, but there's a lot of times it will get up to about 47 cents, 50 cents a share. And I said, hey, the whole contract's $1. Why not?
Any of you guys see the... Oh, go ahead. Go ahead.
Exactly how you end up with somebody buying way out of the money SVB puts and then hitting them when the one.
No, I wanted to ask and see if anybody saw the Elon Musk that fake account on YouTube where he's doubling your cryptocurrency. That is back up again, and people are losing their crypto to it. So be aware.
Is Hardy still here? Well, I just had a question. If anybody knows anything about Gillent Technologies, ticker A, they're like a biotech stock that I noticed is like probably one of the lowest PEs for most of those, and they've hit a dip for a little bit, and I know they have earnings in May, but I'm not sure if this is a good entry point for that yet. I'm looking for stuff like that to do long term, but not sure if anybody had any thoughts on that.
What was the ticker on that again, please?
Just the letter A. They've been around since they got nailed in the .com bubble, but they make like medical equipment and diagnostic stuff. So it's something like in my industry, so I've been keeping an eye on it.
Mister, what's the ticker for that small cap 50-cent play? That's all I got left now. Fucking rob me, man.
MULN. It's Mullen.
Cool, bro.
In reference to ticker A, I mean, I think it looks like it's approaching entry point, but I mean, I'd probably hold off a tiny bit. I mean, my thought would be 125 would be my entry on that.
What's your thesis?
Yeah, that definitely makes sense.
Bullishness on A.
Say it again?
What's your thesis for Agilent Technologies? Why do you think they'll go up, especially in the face of a pending recession?
Well, it's based purely on looking at like their PE ratio in relation to biotech as a sector, and they're like one of the lowest.
Are you looking at backwards PE or forward PE when you make that assessment?
I guess forward. What do you think would make more sense?
I mean, you should be using forward PE. when you're assessing.
Okay, yeah.
But a lot of people, if you don't pay attention, wind up looking at the backwards PE, and it doesn't always align well.
Oh,
The
right, right.
problem with forward PEs, you need to understand the assumptions that were made and whether or not you agree with them.
Yeah, and part of it too is like I'm in a related industry, and I've seen like positive growth in that sector despite there being, because like some things are more in less impacted by interest rates than others, but they're still a technology company.
I think the difficulty of being in an industry is we tend to lend our personal bias towards it. And I think with investing, I think anytime you can remove any of that personal bias, I think your financial decisions are always going to be better. So that would be my piece of advice in this.
Yeah, and that's partially why I mean, I used to have like 50% of my portfolio in healthcare stocks, but I've reduced that quite a bit just because of that reason.
I have a couple plays if anyone's interested. It's nothing groundbreaking.
Always. Please.
So Altria's ex-dividend date, that's ticker MO, is Thursday. I believe it. Yeah, it's Thursday. And they have a pretty high yield. It's like 8-ish%. It's 94 cents a share. And I noticed that because of that, their premiums on put options are super, super high. And they did pretty well last week, even though the market was going bad. They stayed relatively flat, ticked down a little bit toward the end of the week. So you could either get put options and then just set them kind of far out of the money and pick up a pretty nice amount of money. Or if you wanted to buy the shares to pick up the dividend, either of those would work. I have 100 shares and I'm also selling puts. And I also noticed Walgreens. They took a huge hit from the market generally last week, as well as some specific news with them. But their earnings have been looking okay. If you're bullish on Walgreens, their earnings is next week. So there's a couple of plays, depending on whether you think bull or bear, you could go calls or puts. I'm kind of looking at Walgreens yet and making up my mind which way I think it's going to go. But those are my two.
Do you also see Altria as like a recession-resistant company?
I'm not exactly sure how I feel with them. They're pretty recession resistant just because they're a vice, but also at the same time, I'm not gonna commit to just buying Altria shares and holding them for 30 years because I really don't know how well they're going to be able to break into the non-tobacco nicotine market. I mean, their market share in tobacco is shrinking, and they know that, and they're doing okay, I think, in getting into like the nicotine pods and all of that stuff. But I don't know if it's gonna sustain the company at its current levels, especially after they had that big swing and a miss with Juul.
I agree with that.
What happened with Juul?
They acquired a exclusive right to market Juul products or something close to that. I'm probably not exactly right. They paid $18 billion for it, and then shortly after that, the FDA essentially banned Juul from operation, and Altria more or less got out of that entire partnership with Juul with some intellectual property rights to smokeless nicotine that was estimated to be worth, I think the number was $250 million. And then they went and acquired Enjoy, which is a competitor to Juul, but has FDA approval. And to make up, yeah, and like they lost $18 billion. Now, they say what they did was they sold their stake in InBev, the giant beer company, because apparently Altria for a long time owned Miller Beer, and it got acquired by InBev at some point, and supposedly they've been waiting for a while to sell that off and tax shelter it, and the $18 billion loss gives them an opportunity to do that. I think that's kind of polishing a turd, because usually people aren't happy to lose money. I mean, I would agree that they probably picked a good time to sell it to nullify a loss, but I would always take $18 billion if I had a choice.
All right.
But in the meantime, 8%-ish dividend.
Yeah, I was also looking at Verizon for their dividend, and I've heard mixed opinions about them, but I see that as another staple in my opinion.
Yeah, I looked at them too. The only reason I haven't bought Verizon shares at any point is just because, like, every time I've had a Verizon phone, I thought it sucked, and I don't like their service. And as a general rule, I don't buy stocks in things that I wouldn't buy, or I at least wouldn't buy if I was in a position to need it. Like I would buy a women's clothing stock even though I don't wear women's clothing, but I think, like, if I was a woman, would I wear that? And every time I've had a Verizon phone, it just blows.
Yeah, I feel the same way, but I was thinking you could hedge with holding AT&T and Verizon at the same time.
The T-Mobile suck a duck too.
Well, as someone who is currently talking to you guys on a Verizon phone, keep in mind there's a lot of places where they're their only game in town, and that's why I have a Verizon phone.
That's a fair point too. And Verizon is also more than phones. They're a telecom, which is another one of the reasons why I hate them, because every time I've gotten Verizon internet, it sucks too. But utilities especially are kind of monopolistic.
Where are you?
But
That Verizon internet sucks.
Pennsylvania.
Okay, yeah, it's Pennsylvania. Sorry.
Are you sure it's the internet or just the state that sucks?
We're at PA.
Both.
When I had Verizon internet, the first time I was in Castle Shannon, which was close to Pittsburgh, and then the second time I was in Sunbury, which was like south of Williamsport and Lewisburg. That's kind of toward the center of the state. When I was in Sunbury, the Verizon internet was not particularly good, and there was a competitor that had fiber optic for like $10 a month cheaper, and it was just worlds better. There was just no reason to buy Verizon internet. And you couldn't get Comcast in the exact place that I was at, but I could have gotten Comcast if I was one block over in any direction but south. It was weird.
That's usually how it works with cable companies. Are you talking about Verizon high-speed internet or Verizon Fios?
I'm not 100% sure off the top of my head. I would have had to look it up.
No problem. What other plays do we have to share?
I have a couple.
Shoot.
How's everyone this morning?
Great. Yourself?
Good.
Thank you.
Good.
What's the chicken say?
Great.
The chicken says that GME go up tomorrow, so I'm going to get some $18 calls. I also have Deutsche Bank puts for July 21 and SPY 428 on 428. I'll be very excited to see if Aegon's right tomorrow, because I probably have to move out of the country if he's wrong, huh?
Either that or he turns into a bucket of KFC.
Yeah, no. An endless supply of attendees.
Tasty.
Kind of like him, though. I don't want to eat him.
All I know is I feel like a bunch of us need to start buying Wendy's stock and force them to start selling chicken tenders. That way we can actually get tendies from Wendy's.
It would be the hottest item on their menu, wouldn't it?
Darn right it would.
Speaking of Wendy's, I've been seeing a lot of new Wendy's open up over here in Illinois.
I would imagine with a little bit of finagling on the Twitter account and tagging Wendy's that we could probably get tendies at Wendy's, seeing as they're pretty active in that.
We need to get opinion on the Wall Street Bets Twitter. Send them a tweet. Say, hey, I want to get some tendies from Wendy's.
Sounds about
I don't know
accurate.
if the Wendy's social media team will grant that to us. It'd be kind of fun having some banter with Wendy's social media. We'll use ChatGPT or GPT-4 to respond in an equally witty way.
Where's the beef?
No, you know what would be really fun is to freaking put Automod against them.
You mean visual mod?
Oh, is that visual mod?
Perhaps. Alright, well, thank you for sharing. Who else has plays?
I just found out that there's a ticker for a company called JFrog, and their ticker's Frog, Frog. Maybe somebody can do some DD for me on that.
You could do the DD. There's no reason we can't have to do it for you.
Yeah, do
You're
a quick,
right.
do a quick lookup and
Yeah,
let us
if
know.
if
Yeah, let
someone
us
could
know
do my
about that.
homework for me, that would be really appreciative.
You know,
Well,
it's funny you
right off
say
the
that.
bat, you know, I'm a little biased because I like the ticker name. So, but let's see if there's any
I've
info
already
about.
caught people using ChatGPT to write their resume and apply for certain jobs that the portfolio companies I advise have put out.
Is that's not illegal, is it?
It's not illegal, but it makes the job harder for the hiring teams. So I've set up tooling to help them detect the use of ChatGPT.
And what is your kind of, I guess, opinion for people that do that?
They're being clever, don't get me wrong. I'm happy to put them through to the interview, but if the job opening is backlogged with a lot of candidates, you need some dimension to cull them.
Okay, so it's more for just the.
It's not an automatic rejection if I detect ChatGPT in your resume. It will,
Okay.
however, get flagged.
Okay, so more for awareness versus disqualification.
Yeah, I think I actually just saw somebody's Reddit post that they went through an entire interview, and I guess they were a quote-unquote fast typer, and the camera was not looking down at their hands or something, and I guess they did their interview using the assistance of ChatGPT.
90 words a minute is like above average. I wouldn't call it top 1%.
Ah, yes, you
But
saw the same thing.
the job is also for a 70K bank office job, so the vast majority of those quite literally are copy and paste in Excel. They'll be fine. I'm not terribly concerned.
Just want to give a shout out to Business-Union in the chat because they said they're going to do some JFrog DD for me, ticker Frog.
But sounds like we got some bullish news for Microsoft then if ChatGPT's helping people nail the interview.
Well, the interesting thing is GPT-4 is like 50 times more expensive or 20 times more expensive than GPT 3.5. So we'll see to what extent Citadel, for example, will be able to secure an advantageously priced enterprise license.
I have some calls on WAL. I picked those up during the last Friday when everything was kind of going down. I felt that they were going to bounce back this week after a little bit of the chaos settled. So I have $40 calls expiring in April.
Nice. Yeah, it was interesting. So I'm doing a stock market game for an investing class I'm in, and I was in 8th place, and I made a risk and bought I think $20,000 worth of FRC, and then shortly after it was announced that they were going to get a $30 billion bailout, and I went from 8th place to 1st in one day. Any other plays?
Isn't FRC at like an all-time low right now?
Yeah, it's very low. It went down, I want to say like 60-70% in a single week, and I think it's going to climb back up.
So, general consensus this week: do we think the market's going to go up, or is it going to keep going down off the Credit Suisse fears?
Well, Credit Suisse also got a bailout.
Credit Suisse bailout was 3.2 billion, if I remember the news media line.
Yeah, I saw that they're merging with UBS. I mean, I think it sounds bullish, but what do I know? I'm mostly just trying to figure out where I think it's going to go because it'll determine what I buy first or what I sell first and what I wait and see. Because if I'm going to sell some puts and the market's going up, I want to sell them right away. But if it's going to go down, I want to sell my calls first because I'm doing covered calls and covered puts just because I'm basic.
I think this last week there was a lot done to try to quell fears around the banks. So you might see if there's any more news coming out about banks about whether they're helping or hurting. And if not, I think we're pretty well past the thought of, oh, we're going to go into a recession because of the banks, and it might be safer this week.
So,
Good morning.
good morning. So I'm looking at a ticker, EMAN, Imagine. So they're a company based in New York, and they make LED. They manufacture organic light emitting diode technology. I'm sure that would be good for some farming or some crops indoor, which will probably help. Now I'm looking at calls. I'm thinking about buying some shares actually.
When you say organic LED, are you talking about something that is made from biodegradable components or plant-based components? Or are you talking about something that is for organic use, as you were saying, like grow lights?
So I need to do some more research on it, but one of the other guys on the Discord was mentioning it, and I started looking into it, and it seems like to me, yeah, it's for growing. I don't know how they make the diodes, but it's been up 50%.
Pretty sure they just catch fireflies in order to do that, don't they?
Oh, haha. But if they're doing it specifically to make grow lights, what they're doing is there are certain wavelengths that plants respond to better for photosynthesis, and that's probably what they're making, which a lot of that's needed for like vertical farming. So basically these companies that do these giant hydroponic farms within urban areas, that's something that they need.
Because I'm an indoor grower. I'm a grower myself for over 10 years and indoor grower. So that's why I thought it was pretty interesting. And, yeah. Thanks. And I also use LEDs, and yeah, they're way better. They save a lot of power, and they're just overall good growth. Samsung LED is probably the best.
But isn't that too expensive? Power consumption is huge.
Well, LEDs actually use a lot less power than regular lights. That's where he's kind of talking about. That would be kind of bullish for anyone who's doing hydroponics that involve grow lights, because they use pennies of electricity compared to regular fluorescent light bulbs.
Yeah, HPS and all that's a thing of the past now.
Yeah, but still, electricity price nearly doubled now, so it's still quite expensive. Well, it probably depends on what you're growing, right?
Yeah, if you were growing something that's a bit more valuable, it would be worth it.
I'm growing cannabis. That stuff's pretty cheap these days. Dispensaries are like $60 an eighth.
What are they getting at?
Wow, what state's that in? Well, I live in Chicago. Oh, okay.
Yeah, someone mentioned here solar panels a while ago, that it's going to take 10, 15, probably 15 years to pay for itself.
Well, that's just cost of generation versus the prevailing utility cost in one specific area.
Yep. I'm going to be installing the panels myself, probably. And I'm in the UK. You have to look at many different things. I think the highest price is actually attached to a battery. So if you can reduce that and just consume the power rather than just storing it, it may pay for itself much quicker in about 5 years.
Oh, absolutely. But then you'd be pricing your payback assuming you consume all the power, which is not always how things work. Although I'm surprised, would your council get in the way of allowing that sort of thing?
In the United Kingdom, yes, you can.
Okay.
Yeah, and you can also sell the power, but you're getting just pennies on the dollar.
I agree. They'll pay you the wholesale rate and happily charge you the retail rate.
Exactly, the 1/10 probably of the price that you have to pay.
It used to be more worthwhile to just run a crypto mining rig, which is where my question on the payoff assumptions come from.
That's what I'm trying to do. Rather than investing in a big battery bank, I'm going to be trying to consume all that power by mining crypto. And fun fact, in the United Kingdom, the government thinks about introducing a new law preventing farmers from installing too many solar panels on the farms.
Why are they considering that?
No idea, but you could actually see plenty of photographs of a farmland being covered by solar panels. Maybe, yeah, they don't want to change the landscape, how it looks like.
I mean, that sounds like that's anti-green push right there.
Yeah, I know. Makes no sense.
Italy has
do you know
quite a few.
How much? Like, does the UK completely produce its own energy needs, or does it have to import it, or does it export power?
Yeah, I think it has the worst, actually, like a gas storage in the whole Europe. So yeah, it relies a lot on importing gas. And recently, they even opened one of the coal mines.
If they already produce more power than they need, it might be to keep utility prices stable. Because I know in Colorado, there's
Sounds like a robot to me.
Let him cook. He's speaking through the blockchain.
Maybe he's talking about the problem with the wind farms. Yeah, at the moment they're producing too much energy, and the infrastructure it can't actually handle the load at the peak time. There's just too much power being generated.
Am I clearer now?
Yes.
So basically, yeah, if they're getting too much,
you are no longer clear.
Hey, Opinion, I have a question for you while he's trying to figure out his blockchain issue.
There's a glitch in the matrix.
Apparently, I don't.
One more comment in regards to the solar battery. You have to remember, let's say, if you purchase a Tesla Powerwall with 10 kilowatt hours of storage, and you've got 4 kilowatt system, you can't even store 3 hours worth of energy onto the battery, and the whole battery costs you around 10K. So it's, yeah, the battery is very expensive. If you can just avoid that, it makes a huge difference.
Yeah, I'm actually interested. I've been trying to research on the new lithium batteries that they were working on. I believe Panasonic and Toyota actually have a partnership, if I remember correctly. I'm sorry, I was reading about it last week. I can't remember what the name of the new lithium battery is.
There are even some
Are
other
you talking about lithium iron phosphate?
No, give me a second and I'll see if I can pull it up. Panasonic and Toyota made a joint venture, and
is it an iron sodium?
And Hardy, is it true that a good way to test your batteries and see if you have lithium in them is to cut them in half? Or did I get rickrolled? Tough crowd.
I mean, if you're willing to build your own battery and you're comfortable working with super high amperages, I believe you can buy the cells as low as 52 cents a watt, and then just assemble them into 48-volt packs.
Rather than doing that, you can just scavenge old cars, electric cars. Just get a better battery out of it at a very, very cheap price.
Oh, absolutely, but how many cycles are on those cells? And what kind of battery chemistry are they? And will they work in cold weather? And there's a whole lot of other variables.
okay. Formed a joint venture called Prime Planet Energy, and the type of batteries that they are making are called prismatic batteries, which are in contrast to cylindrical lithium-ion batteries. Basically, I believe they are a little bit larger, but I think they are more efficient. And they're not usable in small application products, but in larger application products such as cars and housing needs, I think that they are for better use.
Do you have a sense of their discharge capabilities?
I don't.
One of
I
the
am.
downsides for lead acid, as a quick example,
Fucking Citadel again, dude. Testing, testing, 1, 2, 3. Can anybody hear us? If you can hear us, type in H in the chat. If you cannot hear us, type in N in the chat. All right, so we got some guys that can hear us, some guys that can't hear us. Well, fuck, guys, I'm sorry. I think some people can hear us and some people can't hear us. I think some guys are trying to talk in the chat, but we're just not getting their audio through. I'm not the only person I hear is you, Opinion. Can anybody else speak aside from Opinion? I don't know if we can hear you.
can hear it. Oh man.
Oh,
Oh,
what? Here we go.
Oh God.
All right, thank you for force restarting everything, opinion.
Very good opinion. Thank you.
Know that they're using ChatGPT for sure.
Yeah. So I just want to issue a quick update on the $1 puts that I was short on Credit Suisse that I got exercised on. It turns out the joke is on them because Credit Suisse is back above $1, and I own shares. Look at
Way to go, Scald.
Nice.
Well, I don't know. I mean, we've got this whole merger going through with UBS that's very unclear and opaque. I'm pretty sure it's going to be like the Morgan Stanley JP Morgan merger of like 0809, where like they just try to spin off all the toxic crap into something else, and then someone like Chase.
Lehman.
What was that?
Back then, they sold basically all of the toxic shit to Lehman.
Right. And then Chase came in and bought them for $1 or something stupid, right?
Mm-hmm.
Yeah. So I don't know if that's how this is going to go, but we'll see. Someone says in the chat, I want to start a bank for the bailout money. Big mood, my friend. Big mood.
Yeah. Look at all the compliance requirements. That shit ain't cheap.
Just get you and a dozen of your other friends that each have $1 million to throw at it together, and you too can own a bank.
I guess after Moasis, we can all buy banks.
Fair enough.
That's tomorrow,
But
right?
what's interesting, specifically on banking, right now banks are paying interest less than the federal funds rate, the risk-free rate, and as a result, for the every person, it doesn't really matter. But for someone who has in excess of, let's say, $10 billion cash in the bank, it's a lot easier for them to just pull out the money and buy 1 to 3 month treasuries against it, because it's liquid. It's even more secure than the bank, and as a result, it's creating some form of bank run, a digital bank run for the high net worth and ultra high net worth accounts. So we'll see to what extent the banks will have enough liquidity to support those withdrawals or those movements into treasuries. Oh no, did I lose everybody again?
No, I still
No,
got
I was just
think
thinking the same thing.
I think we were just taking in your statement. Or at least I was.
All right.
So, I have a very, very, very long away play I can bring up that I wouldn't be doing for a while, but yeah, and it's on Hasbro, which I know is everyone's favorite company. So, essentially, long story short is they're coming out for Magic the Gathering with a Lord of the Rings set in June, right? And so one of the things that they're doing, which is kind of scummy, but probably going to make them a ton of money, is they're making a card for the One Ring, but they're making a special version that will only be one card. Literally, there will be one printing of it. It's in like the Mordor language. It's special like images. It's all the stupid stuff. Anyway, it's only available if you buy their most expensive product, is the only way to pull it. And because there's only one of it, and it's an iconic thing from Lord of the Rings, people are already offering stupid money for it. The long story short being, a bunch of their most expensive product is going to get opened by a bunch of people hoping to pull this one stupid expensive card, and it's probably going to make their October earnings look stupid good. So that's something I'm keeping an eye on. It's scummy as hell, but it's probably going to make them a ton of money.
Yeah, Hasbro puts. I agree with Business Union on that one. Especially considering they gave away their IP the other day on accident, but it's not really revocable. That was real dumb. Be like if Disney came out and was like, hey, you can just use Mickey Mouse. It would, like, I don't know how the stock did not plummet like a stone. It was real dumb.
Well, I'm still going to keep an eye and be... I'm not getting it now, but I will potentially be bullish come the summer if that set sells like I think it's going to sell for that card chase.
Did anybody see the San Francisco-based Reddit is going to vacate its current office space?
I'm sorry, who's vacating office space in San Francisco?
Yeah, what was it? Reddit. They're decreasing their office. They're vacating their office space. Apparently, they're subleasing it to some other company called Market Street, known as Square.
Hey, you guys ever use a trailing stop loss?
I did it on the last trade. I'm never doing it again.
Okay.
Yeah, I had the similar experience. It's not my favorite thing.
I've never used it. I just was. It's gone up quite a bit. I just want to kind of put a floor underneath it. Is that the good thing to do or no?
Well, just make sure you have a lot of room if you're putting a floor to it.
Yeah. It's options contracts, so I don't know. Probably.
Yeah. My favorite way to put a floor in is to put a limit sell.
Okay. Yeah, I only use limit orders, by the way. Usually. Not market orders, you get fucked.
Although I heard if you use a decent brokerage like Fidelity or somebody, they'll actually find price improvement for you.
Yeah, I've experienced that with my broker actually. I had a limit for like 530 and I got filled at 538, which was nice when I was selling it. Those AMD puts I bought on Friday are up quite a bit already.
Well, there's not much to say after everyone watched the events over the weekend. However, with GameStop's earnings coming up, do you have an opinion to share? All right. Welcome up, angry investor. What opinion did you have to share on GameStop?
Hi everyone, thank you, Hardy. So just very quick because I think my portfolio is quite green this morning. So basically, as I shared last week, I've opened a lot of ETFs on gold, physically backed gold. As you can see, it's printing well because we are just about to face a huge, financial sector liquidity issue. Because for the first time we have seen, it's not the first time, but it's very critical that it happened on Credit Suisse. How comes that the bond holders have been wiped out? They are senior compared to the equity holders. This is a game-changing event in Europe. Europe is basically suffering as well. A fly out of deposits from big banks such as Switzerland, so on. And now I think Deutsche Bank is under pressure because everyone has, like their eyes on Deutsche Bank. We know what's their derivative leverage. They have been suffering as well during the last decade as Credit Suisse was. And now we saw the result of Credit Suisse suffering. Is Deutsche Bank the next? Okay, if it's next, this means that everyone in Europe is fucked up and they will kind of try to raise funds through issuing bonds. But hold on, now bonds are not safe anymore. They are second. They are not the first senior now anymore. They have changed the game. So just very quick, my trades. I'm opening shorts on the German index, the Spanish index, and the Italy index. Why Italy index? Because 1/3 of the index is basically financial sector. Okay, you can check out. It's purely financial sector driven. That's why it's basically it's crashing. If you see the performance in the last week of Italian index. So next I'm opening also German short because Deutsche Bank is coming. Deutsche Bank is coming, man. But in the same time, I just want to take the chance to basically leverage on my long-term portfolio. So I'm also opening long on Volkswagen. As you know, I love Volkswagen, and also in Italy, Stellantis. Yeah, that was a good one, Lewis Venture. That's the only good thing you basically contributed to this community. That's a real value play. And on Spanish index, the short is because 23% of the index is basically the big banks of Spain. On the other side, I would start opening long plays on utilities because if you see what happened after Lehman Brothers in the next 3 years, like you take from 2008 to 2011, the best performers were one of the best were utilities. Actually, you could see that utilities were trading back then at a PE ratio of 20, close to 20. Holy shit. And now,
No way,
yeah,
man.
and now it is basically 10, 12. It's going up and up and up. If you check the utilities today in Europe, fucking green, okay? I can recommend you the best utility in Europe. It's Iberdrola. Ticker is IBE. this is the biggest player on renewable energy. They have been transitioning since, it was not the fancy, trendy sector. Back in 2008, 2009, they did a huge, kind of transition to the renewable sector. And now they are the biggest player, and their financial statements, this is the best. I've been evaluating like a lot of utilities around the world, and this is the top in terms of returns to shareholders, how they treat their investors. They do buybacks, they keep increasing dividends. Their
Hey,
balance
journalist, real
sheet,
quick. Journalist, have a real
yeah.
quick, not to interrupt. Do you have any particular plays in
Well,
the
you
utility
already
play?
interrupted, but yeah, go on.
No, I just want to know if you have any particular plays in the utility space. So I see your thesis. I'm just kind of curious.
I was just talking about the particular Iberdrola case. Interrupted me.
Yeah, I know. I didn't pay for this class. I'm sorry. I'm just.
Continue.
So thank you for sharing.
I don't. This is the issue with this community. You are like kids. You don't let the grown-ups talk.
Yeah, but you talk and you talk and you talk.
That's
The
right. I
problem.
agree with
Sorry.
journalists.
I think we've run out of time. Thank you very much for sharing. If we have any other plays to share or any opinions on GameStop, we'd love to hear them.
Are you doing anything? Oh, sorry, Hardy. I was going to ask, are you doing anything else out of the ordinary? I know you've got a constant play where you got your cost basis to negative now, but are you doing anything special for the earnings coming up?
So I have March, March 24, 1850 calls on GameStop, but I do want to point out that I entered that trade originally as a strangle. The puts printed, and so my calls are free rolled going into earnings. If you're able to do the same, then by all means come and join me. Water's warm. That said, because of the nature of the due diligence spread by a certain subreddit and how UBS may opt to liquidate a theoretically short position of 216 million shares in GameStop, this may be a catalyst for involuntary buying or shorts closing, and therefore Moasis. Whether or not that actually happens is to be determined, but if it does, I've already positioned myself to benefit from it in a way that is risk-free. In the absence of that, it may be to your advantage to sell, let's see, we're at GameStop. Because we're approaching earnings, it may be worth selling the maybe $16 puts for at least $1, so that you make an annualized, I think it comes out out to like 340% return. And then you close your position after the IV crush of earnings. Because IV specifically on GameStop is like 140%, up from about 90% prior to the earnings announcement. So figure you can anticipate 40 points of Vega working in your favor against that $16 put, in addition to the theta burn that you'll get to enjoy.
You're almost getting paid double because of the event, or at least it's a juiced return right now.
I have two sources of upside, not necessarily getting paid double.
No, I appreciate that as always. Is anyone else playing GameStop? Shares or options on the call?
I got shares. I'm short vertical, but credit spread for April. And I sold my AMD puts for $1,000 profit this morning. Yay!
Congratulations.
Good job, Lebowski.
Thank you, thank you.
It looks like Decibel here is buying GameStop 16 calls.
So I have a non-GameStop play that I made this morning that is pretty wild. It's treating me okay so far. I bought a bunch of Credit Suisse calls for $5, dated out next year for a penny a piece. I just bought a shit ton of them, right? And now the spread on the bid ask has gone up. They were selling between 2 cents and 4 cents a minute ago. They're back down to 1 cent for the bid. But I've been able to clear out of some of this position at a 200 to 300% gain, and looking forward to clearing out of most of it at a pretty substantial gain.
I did something of a similar thing. I put in a 2-year leap option bid. I put a couple of them in, and only one hit, but exact same thing. Like right at 9:00, 9:30. I mean,
Right? Were you able to get in at a penny a piece, so like $1 a contract?
well, they're 2-year leaps, so they're more expensive. Let's see actually what I was able to get here. No, mine was, let's see. Let's see. Gotta do this. Say this correctly. I got it for 20 cents, but it's a January 17th, 2025 call. $1 call. I'm already in the money, like, just immediately.
Right.
One of the things I wanted to say too, because there was a ticker mention this morning, which is EMAN, Eman, and it is Imagine is the name of the company, and someone brought it up, and the people will look at that. It's up 11 and 3. It's up 11%, but there's a problem with this company, and it's not so much a financial problem as it is just a United States military problem. Is there? I don't know how to put this. I've owned them for years. They make
What's the play?
The play is not, don't buy it. I just want to steer people away from it, just because it's heavily entrenched in the United States military, which almost has a stranglehold on what they can do, because they make really sensitive military equipment. So they can't expand abroad. They're tied. They're joined at the hip to the United States military. So while they're up, I mean, I guess people are trading the stock. I don't know how that government, might feel about them becoming greatly successful. This is a small cap company.
Morning,
And
Georgia. Morning, Georgia. V-shaped recovery 1030. Pin it, motherfuckers. Pin it.
V-shaped recovery on what?
Tech, baby. Tech.
Yeah, that's
the
all
whole
right.
fucking tech sector. The whole fucking thing.
The money's got to go somewhere when it comes out of banks. Angry Investor has a point too, though. Some of it is gonna go into gold, because with the banking sector, the way it is, you got the oligarchs from Russia and the Saudis. They're probably going to be buying gold.
On a real note, I hope everybody had a good weekend, man. Missed you guys.
You should come hang out in Discord on the weekend. There's VCs, there's movie times. I mean, you're already here, but there's a casino. Shameless plug.
Listen, 5 days a week is plenty for me.
Fair enough.
I had a question. If anybody has more information on it, that'd be great. IRNT. I've been saying it this morning. They had a rip on Friday, and then they're down 21% today. Is it just a squeeze, or is there any news around them at all? Or are they just trying not to get delisted?
What was that ticker, America?
IRNT, IronNet Inc.
Penny stock pre-revenue. That's probably a scam. Go ahead, Scald. Sorry.
I've sold 30 of my call contracts on the CS $5 calls dated out a year. I bought them for a penny a piece, sold them for 2 pennies a piece for a cool 100% gain.
Money.
Still clearing them out, man. Picking up these pennies in front of a bulldozer. Don't mind me, or steamroller rather. There we go.
Are you gonna keep any? Are you gonna keep? Because you're in a position you can keep some.
Oh yeah, once I'm done clearing these out. You know, Luce was also in this play, I think. Let's have a talk with Luce. Luce, how are you doing today, buddy? Is he up here? No, he's in the chat though.
Yeah, he said he's doing something. I don't think he can get on the stage yet.
I did the old double down. Did the old double down on him, you know? It's risky.
Yeah, but if you're sitting there in front of your screens, I wouldn't advise, everyone to do it, but you can do it, Scald. I have faith in you.
If you heard Scald say he grabbed those contracts for a penny, and you don't understand how he's moving them for 2 cents, stay out of Scald's play.
Yeah, that's fair enough. Also, if you don't plan on, sitting in front of like 6 monitors all day today and just being an absolute dork, then maybe don't.
If a bid-ask spread is a confusing concept, you might not want to do Scald's play. Having said that, it is a very good play, and I'm very happy for you, Scald.
Hey there, everyone. Good morning.
Morning. What's on your mind?
Yeah, something on the Reddit chat that was brought up here again on Discord. That Imagine company, the guy from Chicago said that the organic LEDs, he thought it was used for farming. They're just OLED screens. That's all it really is. They're called organic because they have carbon in their polymers. So essentially, they use the carbon to emit the light from the diode, which makes it more energy efficient. And they're really
Okay.
cool. The OLEDs can be flexible and whatnot, but no, they're not used for farming whatsoever.
Thanks for the info. Yeah,
Yeah.
George, actually, one of the guys right here in the chat actually shouted that ticker out one day, Georgia actually. But yeah, thanks.
Yeah, just want to let you guys know. And I was wondering, what do you guys think about oil? Because the USO ticker, the oil for United States, it's at its lowest right now, and you always think oil is going up. Why is it all the way down for the year right now?
Oil's down because energy's down, because the banks aren't doing well and people are predicting a recession, and energy doesn't do well in a recession. There's less demand.
I see.
And China has come back online. Oh, go ahead, George. You get it.
I don't know how true it is, but with the Credit Suisse bank situation, I read somewhere, maybe in the chats, that the Saudis have lost money. So Oil's probably going to get cheaper. Gold is probably going to get more expensive, kind of at the same time.
Georgia, Saudis don't lose money, man. Those motherfuckers are sitting on infinite money. So whatever you think is a loss for them is just a drop in the fucking bucket.
I would be very cautious betting on gold right now. Gold pops on panic, and it did pop on panic when people were like, "Oh man, the bakes are going under. 2008 is back. Here it is." Gold popped, and often after it pops on panic, people realize the world isn't going to end. Fiat currencies aren't dead, and then gold starts to slowly go back down. So I would be very concerned that you're buying into what is just a panic pop. But that's just me.
So you basically think this is over. This is it, right? This is your statement.
No, I don't think it's over. I think that it might be over pushed for the very, very short term because of the panic of the bank stuff.
What happens if this keeps triggering? Let's say next is Deutsche Bank. Then what?
And gold will continue to go, and if it doesn't keep triggering, gold's going to, in the short term, go back down, right?
So basically, your advice to the audience is it can go up, it can go down, right?
No, my advice to the audience is it took a big pop off of panic, and so you need even more increased panic if you want to keep riding the pop right now because it's in overpriced territory since banks may not all just collapse. It's pricing itself like we're screwed because that's what gold does. That's all I'm saying.
So what you're saying is, unless there's cascading bank failures, a la 2008, 2009, you would expect gold to move back down closer to its average price.
Yeah, that's all I'm saying
Understood.
for the short term.
Also, the person who was asking about like why is oil down? I put a little link in the comments for oil intensity. This is something you should understand. Basically, for every $1,000 in GDP, it's worth 0.43 barrels of oil. So when you have a recession or an economic slowdown, and we're talking about millions or billions of dollars in economic activity not occurring, you're talking about millions or billions of barrels of oil not being used. So when you have recessionary times, you typically have lower prices of oil. Not all the time, obviously, it can go against it. It's happened in the past, aka stagflation and things like that. But typically, there's less oil used during times of a slump. Also, oil intensity has declined over the decades. So now we're less reliant on oil to drive our economies because we have more of a knowledge and information based economy, and your computer does not run on oil, unlike, say, your car. So we can now actually generate a positive economic return with less oil. So those are two things to keep in mind if you're getting in on trading oil. It's a very tough field.
Nice.
A play I've been looking at is calls on Citigroup and calls on Coinbase as a hedge.
All right, can you explain? Because to me, those are two separate theses. So just curious.
Well, realistically, at the moment, I see Citigroup potentially they're at like kind of an inflection point where either everything goes down the shit. I mentioned it last week, and I was actually looking. I've been looking at it last week. I'm just waiting for kind of things to settle slightly. But yeah, I can see the bull run for either the banks or if everything collapses, then obviously Bitcoin, as it always does, as an inverse correlation, is going to go up. So I mean, it's pretty much just a simple edge.
FRC is down to $19 from 147 last month.
Your mic's I can almost hear you normally this time. You're getting there.
FRC is down from $147 to 19. Goodbye. Is that a goodbye? What do you think?
No.
Good day, everyone.
Just a quick question. It's been a while since I've heard anyone say anything about WWE, but the dividends are set to release this Friday. What's the thoughts on that with the upcoming quote unquote sale and whatnot?
I'll chime in. I haven't heard anything about the sale for a while, and I don't think the dividend being paid this Friday really has any bearing on that. I think the fact that you haven't heard a lot of buyers on the news and the fact I don't know anecdotally just from reading the internet, it's not on anyone's front burner. And given the financial situation in the world, you're not going to see a ton of people trying to bid up a company right now. So I would not buy it. You're already ex dividend, so you can't buy it for the dividend this Friday. And I don't see the deal coming through anytime in the next 3 months. But what do I know? It's not my money to waste.
Sounds good. I'm actually good for the dividend because I bought in like a couple of months ago or so.
Nice. I would hold through. Yeah, definitely. I mean, well, you're already going to get it anyhow. So I'm sorry. I just haven't heard anything. And you're right. We haven't talked about it a lot. And I know there was the potential Saudi buyout. So are you referring to that or just in general? Right.
Yeah, exactly. When the rumor was the Sods and Vince McMahon trying to sell the company, legal woes, blah blah blah. I just bought and held. I've been holding. Figured I'd get the dividends.
Yeah, I mean, if you look at the last few months, I mean, the stock hasn't done horribly either. So, I mean, if you're a fan and you really believe in it, yeah, I would hold it, but I wouldn't be adding to it for the story right now, personally, if that makes sense.
Absolutely. Thank you.
Oh yeah, brother, wrestling brother, cream rises to the top, motherfucker.
Oh yeah, step into it.
Oh yeah.
I mean, we've talked about this, but they would be a great acquisition target for a ton of streaming services. They have a lot of content they would bring.
True. Very true. Yep.
Yeah, look at how successful those sports kind of documentaries have been with Netflix. I could see more streaming services wanting to do the same.
I'm a little surprised Disney hasn't tried to add them towards their ESPN Plus side. It feels like
Yeah.
that content would live very happily there.
Easy layup. Those ESPN films are fantastic. I'm sure they could rinse and repeat that.
George, were you saying something? Or?
Yeah, I was waiting for an opportunity to ask Scald what the 1-year leap options, first of all, what they're doing and which ones he's selling for 2 cents out there.
Yeah, so I have leap options that were $5 calls on Credit Suisse, dated for January 19th, 2024. They have a minimum bid price of 2 cents now, ask price of 4 cents. I was able to buy them this morning at 1 cent a piece.
Oh. Nice.
Yeah. There's also a lot of people asking in the comments about what's driving the Bitcoin pump. So I'm just going to call out what I wrote out here, which is Satoshi Nakamoto created Bitcoin in lieu of the 2008-2009 bank failures. There was a flight to safety that now includes Bitcoin as well as gold. It's worth noting that Bitcoin is still much more volatile than gold, and notably, economist Nassim Taleb says that it is so volatile it can never be used as a currency and it's only speculative advice. Also, it's worth noting that Nassim Taleb got personally burnt on his Bitcoin trade, so he might be a little biased. But I agree with Taleb's criticism that Bitcoin is volatile, right? So it might not be the best asset to use as a store of value, but like gold might actually be better for that. But you have to understand that Bitcoin was literally made for this. Like Satoshi Nakamoto saw the 130 bank failures of 2008, 2009 and said, I'm making this decentralized system so this can never happen again. So, I mean, it was literally made for this. And that's probably why it's pumping right now is people that are into crypto know that.
Yeah, I mean, so store of value and currency, I think, are often, um, correlated strongly, but they're not always. There's not necessarily a causation there. So I think, like, as a store of value over time, you could argue that Bitcoin has done exceptionally well. And, you basically just look at a very long, time horizon, and the thing has gone up like amazingly, right? But as a currency, you're right, the volatility is too much. You can't buy a loaf of bread with one Bitcoin one day and then, a mansion the next day. Like, that's just not how currencies, work. So I think the store of value thesis is there if you're a long-term holder. And, I think the people who have, to your point, known about and believed in that underlying thesis, one, they're getting, you know, uh, the perfect kind of scenario played out to them. Their Bible is coming true. This is like the New Testament. The Old Testament was 2008, but uh, also, the price appreciation is kind of, it's moving the way it should right now. I think the question is, like, the institutional ownership, is that diluting some of the mechanisms that Bitcoin would otherwise like to achieve? I mean, I think when it's getting used as a trading vehicle, it really corrupts the concept of it being a currency, because the volatility comes with it. And, you get a lot of market beta, where I think people would have liked it to be kind of a significant diversifier to their portfolio. It ends up just being another high-tech growth stock in terms of correlations. So that's a bit tough on the thesis, but
I mean, I do agree with what you're saying there, except for that last part. Sorry to chime in. The correlation in the last, call it 6 to 9 months, has broken. But you're right. During the COVID pandemic, when it first hit, it definitely took on to that high tech, high fly grower growth. But it has decoupled there. In general, for people, even if you don't believe in it, look at your portfolio, depending on your risk tolerance, your age, all that. Your alternative should be like 0 to 10%, or really in this age group, 5 to 10% in the alternative. Alternatives counts REITs, gold, and Bitcoin. You want to put 1 to 3% away and forget about it? I think that's a smart idea. You don't have to be a maxi. You don't have to own everything and think the whole world's going to burn down to make some money off of it. So that's my piece.
yeah, I agree with that. I've actually I've had Ethereum that I bought and sold and put a down payment on a house. That was very nice, but I ended up rebuying, Q3 of 2022, and the less I look at it, the better I feel. You just add a little bit on really significant down days if you still like the currency, but it should be the 1 to 3% that you never look at. And, when the nuclear winter comes, maybe you'll have something that'll be useful.
I heard nuclear winter. Bullish. Bullish.
There's that ammo company and the MREs. You need to do ammo and MREs called. I rethought
Yeah.
it.
The I don't mean literal, the figurative nuclear winter, 2008, down 50% type thing. Yeah.
No, I appreciate it. Good conversation. I'm going to guess people are going to want us to move off crypto before we even go any further, because that's usually the case. But
So is crypto a store of value or a currency?
It's definitely not a currency because realistically, the fees that are involved with making transactions on the blockchain for Bitcoin are ridiculous.
have
So
you heard of a bank? Sorry, go ahead.
no, but with Bitcoin as a currency, yeah, it doesn't work. But the thing is with
Why doesn't
Bitcoin,
it
it's
work? Is
generally
it gas fees or?
well, it's not gas fees. It's just it's the transaction fees. They're like static transaction. But the thing is, though, it's an intermediate between a lot of other digital currencies. So, like, if people are purchasing other currencies frequently, they will purchase Bitcoin and then trade into these other currencies. I mean, obviously, Binance came out with Binance Coin to kind of come away from this and things like that. But generally, it's a much more a store of value opposed to a currency. they were talking. Obviously, there was loads of talk about the Lightning network and everything like that to try and reduce transaction fees. I haven't looked into it for a while now. But,
We've been on crypto for a while, guys, and people normally get pretty agitated when we stay on crypto for too long.
Yeah, thanks. Yeah, that's the second time. So let's talk about something else.
Let's talk about price.
Aren't they flat as opposed to
Feds are not going to raise rates. That's my take.
I think you could be right, and I was going to ask if anyone's playing on that. Are we kind of whistling to the graveyard right now, guys? The Fed had to step in with the other 3 or 4 Federal Reserves to make sure we had enough dollars in the system. That is exactly what started 08. And then we have Fed Speaker Powell coming out on Wednesday. You don't think he's going to dump the markets?
I think he's going to do 0.25. I mean, I think that if he does no rate increase at all, that would actually be bearish. If they blink, right, I think that would actually be worse. So I think they will do a 25 basis point hike just to show that they're still staying the course, they're still strong, right, but not necessarily half point.
I 100% agree with you. I think that, he's done a pretty good job of walking this tightrope ever since, the epic fuck up that was letting, ZERP go for way too long. But they can't do nothing. It would exactly to Skull's point, but 25 bips, I think, became a certainty when the ECB went up 50. I mean, they're behind us a little bit on the rate hiking cycle, so it makes sense that they're going a bit higher. But I think that in and of itself gave us license to go 25 bips, and I think we'll stop after that.
But you also have to look, if you want to look at other rate hikes or not, Canada did not raise this last time. So I know it's a much smaller economy, but they are in the same continent, AKA, I think, feeling some of the same inflation pressures. But I really do think it is going to be a quarter point, because I think what they've shown with the other emergency reserve moves is if they do break something on the back end, they'll just patch and fix it and throw money at it. So, I mean, that's really what they're doing.
Reality is it should probably be 0, but as has been said, that sends a message of, oh crap, it's broken, the banks can't take it anymore, we need to stop. Not we're choosing to stop because the numbers are right, just, oh, the system doesn't work, we have to stop.
Right.
So they're going to do 25 just to keep, even if that's not the case, just to not give that message of, oh crap, it's broken.
Interesting.
No, and I believe that too, because go ahead, Skull. I just agree with.
Oh, sorry to digress. Someone just posted in the comments a pretty gnarly chart for lithium. Looks to be a monthly chart. Are we not doing lithium anymore? Is that not a thing? Did batteries stop using lithium?
I've been in lithium for a long time, for several years, and Chile, main place to go. Argentina is another place to go, but they tend to be OTC market tickers.
I mean, yeah, I don't think we're gonna find one next to AutoZone or anything.
American Lithium is on the NYSE. It is a lithium company. Didn't IPO
But it's
too long
usually
ago.
the
Maybe
mining is
just
usually done in
production.
emerging markets.
Maybe just global production of lithium is now getting so high that it's causing the price to dump, right? I mean, it's not like this is it's not like a rare earth element like neodymium or something where you can only find it in like 8 places on Earth. This is lithium we're talking about. It's not an uncommon material.
Honestly, Scald, it's probably just following all other commodities which are down because banks haven't been doing well and people are assuming recession, which often creates demand destruction for commodities in general.
So, what do you think? Is the
Wait.
adoption of crypto ubiquitously, is that inevitable, or what do you think?
Well, I just want to go back to you mentioned demand destruction for commodities. I would think it's the opposite in a recession, right? Won't commodities go up?
In
They're all
08
headed
and
down.
in 08 and in the 80s when we had our last two like big recessions, commodities went down. There was a lot of demand destruction because you don't need as much if the economy's not booming, you're not building as much, you're not creating as many things, so you don't need the raw materials, is what tends to happen.
And you have to think there's a lag, right? So when the economy's going strong and it's like, oh, we need more lithium, we need more neodymium, we need more of everything, people ape into it and really start going really hard. Shout out to Cleveland Cliffs for never bringing some of their less than profitable steel mills online, even when steel was at record high prices. They didn't give in to the bullshit. And they said, well, if we bring these things online, it's going to take months. We're going to have to hire people and it's going to take us forever to spend them back down. They didn't do it. Instead, they rode that demand wave like experts. And it would have been easy for them to onboard all these plants, and then they would be producing even more steel at an even lower price, and they would be helping to suppress the price of steel. So, I mean, you got to think about that in commodities, that, you know, their production is typically lagging economic action, and that's what leads to this supply glut, which leads to demand suppression.
Yeah, and
lithium was
Yeah.
down before the banking thing. It was starting to trend down. There's a lot of sodium batteries coming online and other chemistries too, which means that lithium's not as important as they thought it was going to be.
And as Scald said, once prices overshoot, a lot of projects start coming online. That overfloods the market in commodities. It's the old high prices solve high prices thing.
You know, like 6 months ago, there were a lot of articles about what they were talking about with the rare earth metals, backed up with some statements from Elon Musk and his battery development. That because, like whoever was saying it, lithium is quite common, and the other things that are required to make a lithium battery, the metal parts, are not as common. They're harder to come by. So the market has kind of went away from lithium, and people started sort of speculating towards the rare earth metals. But it can go back and forth, I guess.
EV's the future per Ford.
Do you think maybe EV cars might be powered by crypto in the future?
The thing that got me interested in lithium was is that I kind of compared it to oil, and the thing that I kept coming up with myself, this is my own head thinking, is there's oil in a lot of different places. You can even get organically created oil. You don't have to drill a hole in the ground and pump it. You know, that's not really the question. The question becomes, how much do you need of the stuff, and where's like the simplest place on the planet to go find the biggest source of it? And so that led me to some of the Chilean companies, because they have basically a underwater lake there just filled up with as much lithium, like you can't even put lithium in the water anymore, and they just pump it up to the surface and then dry it out and then rake it all up. It really is pretty simple.
So what do you guys think about the new proof of stake system?
I think we vetoed the crypto discussion for the time being. I would love to talk about that, but I don't think we'll be able to.
I mean, I think it's gonna have a great economic impact on the world. You know, not having to literally burn electricity to keep the network running, and that might.
Yeah, did you guys talk about the oh sorry, were you sorry?
No, go.
What were you gonna say?
PP, yeah, you go, PP. We're done with the crypto.
All right. So I just wanted to know if you guys did you guys already talk about the Credit Suisse bondholder scenario, the fiasco going on in there?
Yeah, I think Angry Investor had a long diatribe about how the bondholders were no longer senior and blah blah blah. I kind of tuned out after some time, but I think he was directionally correct.
Oh, okay. Never mind then. I just came back. My bad.
No, you're much more pleasant to listen to. If you have something to say, please go ahead.
Yeah, I mean, you're not. Are you short the bonds, or you're just kind of curious what that means in the way of the grand scheme of things, sir?
Yeah, I just wanted to know. I'm not really into bonds. I did try the 1 month treasury thing, but that's about it.
How did that go for you, by the way? Was that a pain in the ass to buy and whatever? Or
For me, I bought I bought a large amount. It's once you set up your account with your bank and connect it to your Treasury Direct, it's just you just buy it. You wait until the next bond series comes out, and you just buy it, and they deduct it the next day from your bank account. It's not complicated. Thank goodness it wasn't. Um, and and then you get credited back automatically whenever it matures.
Did you ever buy any of the I bonds? I know we've had some other buyers of that when the rate was over 9%. Did you use that because it's the same website?
No. For me, I bonds are only inflation hedge. It's not really to make money. Plus, I don't feel comfortable locking it up for what was it, 6 months, a year, on those things. I just tried the treasury, the 1 month treasury bills.
No, I appreciate that. We had someone who had a lot of bonds that was gifted to him, and I had the same kind of thing with savings bonds. So some people do have it as a small portion of their portfolio, and again, with rising interest rates, may not be bad for some people to look at that if they have a lot of cash on hand.
How is the market doing? Right now,
when you say a
WallStreetBets is
lot,
talking about I-bonds.
yeah, when you say a lot, there's a limit to I bonds, right? Like $10,000, 20,000 if you're married.
Number one, yeah, I think I'm the oldest one here, Rad. No, Georgia is, but you're right. Boomer plays I bonds, and you're right. 2 PP, it's $10,000. It was paying over 9% last year. It did get cut down the next 6 month period to like 6.25 or 6.33. But for some people that had a lot of cash, throwing 10 grand at it made sense. Sorry, go ahead.
Is that something you can get into outside of the US?
No.
I think you need your social security to sign up to Treasury Direct. But I think you also need if you you can do like a business account, like an LLC. You just need an EIN number, I believe.
But yeah, to Rad's point, not many people in here should be doing that. That's pretty far out.
Why is
But
that?
as a
9% sounds pretty good.
As a foreign investor, you could definitely invest in I bonds. You can even invest it through your brokerage. It doesn't have to be directly through the Treasury Direct website.
Which brokerage
yeah.
do you use that lets you go direct to the Treasury Direct website without having to go through? Because that system is a pain in the ass, man. You have to like
Well, you
click on
got,
buttons on a virtual keyboard to get the password in. It's fucking ridiculous.
Yeah. Well, you have a lot of large brokerages. You may have very trade and then interact with brokers. Simply trade as well.
Going back to Credit Suisse, does anyone know about the clause, the credit default spreads, and the
Yeah.
100 basis points or more?
Yeah,
And
nice little out for UBS. That's a sweetheart of a deal.
yeah, that's what I was thinking. So obviously, if these if it all starts to go down the pan, they're going to have a buyout, a get out of jail for not having to commit to this purchase, surely.
Yeah, I'm stupid for not having bought UBS pre-market. That was an amazing deal for them.
Yeah, because I was looking at it and I thought it just seemed incredibly stacked for UBS.
So I bought 100 shares of RE this morning. I'm just buying 100 shares a day. $35. Or wait. Yeah. It's dirt cheap.
Definitely
Have you in
not.
the club,
Sorry.
buddy.
I was gonna say definitely not financial advice.
This is definitely not. I'm just doing it for fun. Dude,
Should I buy re?
I mean, I'm just saying. I've bought crypto shit coins before, so like you're not going to make me feel bad about doing stupid shit.
Stock go down, re. Stock go up, re. It's a win-win.
I'm not
Well-
worried about you, Scald. It's the others. You're good. You read your money all you want.
Oh
Well,
yeah.
Did you get those Pure Cycle puts yet?
Oh yeah, dude.
They've
I
been
left the Pure
consistently
Cycle
down like 5% the last 3 days.
I know it's been dope. I'm thinking about exiting actually. But at the same time, they're going to go to 0-0 if Loose Ventures math checks out, which I think it probably does because he's pretty good at math.
I mean, I'm sure they're fine. 3 months of cash remaining in a high interest rate environment. I'm sure borrowing money will be very easy for them.
In other news, ChatGPT just published a paper to Arvix, and this paper is a 35-page paper outlining all the jobs that it thinks ChatGPT will replace. And this is created by the ChatGPT team. And a highlight
You
on
mean
page
OpenAI? OpenAI? Is that what you're talking about?
Yes. A highlight on page 15 is it thinks that there's only it thinks there's 97.1% chance that it can replace blockchain engineers in crypto. It thinks there's 100% chance it can replace accountants or journalists. But down here at the bottom, it believes there's only a 13% chance that it can replace investment fund managers and only a 12% chance that it can replace stock traders. So we're in luck. The market is truly too retarded for ChatGPT to figure it out.
I don't understand how it's going to replace blockchain, firstly, and then blockchain before stock traders.
Super easy. I asked it to write me an ERC 721 minting contract, and then it did. And then I asked it if there were any security errors in it, and it said yes. And then I asked it to fix all the security errors it just listed, and then it gave me a contract that I'm not going to say I would publish to the chain, but it's pretty damn close to something that I would publish. And it was done in like 5 minutes.
Isn't a lot of the majority of the trading that goes on at these large companies, isn't it already automated?
Yeah, probably. Hey, can you throw a link to that list, Scald, in the chat?
Yeah, I think he's a bit overzealous about. I think that 12% is a bit of an underrepresentation. I do think it can definitely replace software engineers or blockchain engineers, if you will. But if it can do that, what makes you think it can't do trading? You think it's the?
Are you whispering?
That's-
Are you in
that's-
the baby's room?
That's what they're saying, man. I don't know. That's what their researchers are saying. I'm not the one that wrote the paper. But you can download it.
Chat,
Yeah,
so maybe
I-
ChatGPT can't replace you guys, but I'm sure there's a lot of companies that have been working on AI that is already deployed in the world and is already trading.
So here's the problem with using statistical methods on stock trading or just generally any quantitative method is this ridiculous bullshit happens all the time. Like if you look at GameStop stock going from $2 to $300 and you look at all the trends, that was a 26 sigma event if you use standard statistical methods. Here's the thing. A 26 sigma event should not have happened yet. In 13 billion years of the universe existing, something that rare should have never happened. And the reality is, it happens in the stock market all the freaking time. And if you use Mandelbrosian or Gaussian statistical
AI
methods, it gets it a little bit better.
AI isn't just traditional like economics or maths that you've been
Yes,
taught.
but
AI
it's a
AI will
statistical
be able
engine.
to.
It's a
AI
statistical engine.
will be able to, just like you read probably about the whole event on the WallStreetBets Reddit. AI will also be able to do that at some point and make those trades much faster than a human would.
But it's a statistical engine. This is why, like, you can't just let a math equation run your trades.
But it's
Because
not
if you
a math
could,
equation.
you would
I
just
think
do
that's where
that.
you're getting it. You're
Yeah, but
you're kind of
you can't. Yeah, but you can't quantify. You can't quantify emotion. Like it's incredible. Well, I mean, maybe there is some way that you can, but it's incredibly difficult to quantify sentiment and emotion of traders because every winning trade
I
has a
think you
losing
should
trade.
give it
Has a
20
losing trade.
years. Give it 20 years and think back to this conversation. I feel like you'll
Yeah,
have a very different
but
outlook.
the second the market is full with AI traders, you're then going to have people who can literally take advantage of knowing it's AI
But do
and
you
work
think a
against it.
human? But look, this is the thing. Whatever a human can do, an AI can do better. In
AI
terms
is
of,
not some omnipotent, all powerful creature.
but that's where you're getting it wrong.
Well,
It's
actually,
No,
you saying that whatever AI can do, whatever humans can do, AI can do it better is not true. Actually, not
give
under
all right,
all
give
circumstances.
in terms of like
AI works on data
intelligence.
sets. No, AI works on data sets.
And so do humans. Humans learn these things by
Yeah,
reading,
but we
for
can.
example. That is
Hey
just a
guys,
data set.
hey guys, you sound like you're arguing at a pub. Can we
But
stop?
we can come up. But you can come up with abstract thought, which is not derived
Do you
from
think AI
previous
can
Guys,
do that?
guys,
AI
chill,
today is look at
chill.
Midjourney or DALI. AI is literally making artwork. This is something
Oh,
that
we
people
kicked him
10 years
off a
ago.
couple times on
This is
Friday.
something that 10 years ago people thought would literally be impossible. Whereas
Yo,
AI is
Can we
doing it
can
I'm
we
today.
just
just
chill on
saying,
this?
listen,
This is gonna
guys.
get
And I think that's
theoretical.
the main thing about it. It's advancing at such a rate.
Okay, that's what you think, but the ChatGPT team, the makers of ChatGPT, seem to think that that's not going to happen for these specific jobs, and they wrote a whole ass academic paper about it. For the next 5 years, they don't see these jobs being replaced, and they are the makers of the software, guys. So let's move on. There's no point in arguing this anymore. And what other plays do we got, guys?
Well,
I may be selling
yes,
today,
scrutiny, of
guys.
course.
I don't.
Yeah.
Whoa. I may be selling some of my positions today, just some of my long-term stock plays. I'm not sure if I trust this move into Wednesday and the rest of the week.
Is Reddit down for anyone else? Is it once again showing how great of a technology it is, or is that just me?
No, it went down right as Hardy's chat started.
Once
Legendary.
again, the greatest company ever created, Reddit. Once it IPOs, I can't wait to see it do a 10x on its initial listing because, of course, it will.
The trick is to buy the puts at the top. I'm just kidding. You can't do that on IPO. But if they SPAC, my God, it's going down.
Yeah, I'd love to buy the puts at the top, right? Thanks for listening to the sounds of smooth jazz. Wall Street Bets pre-market talk. Hope everyone's portfolios are green. What's your plays out there?
You know what I don't understand? How the Bloomberg jingle in between their segments is so very irritating to me after X number of years. But this smooth jazz track has been the same thing I've heard since I started attending these talks, and I still enjoy it.
I don't pretend to be Loose Ventures or Hardy, let's face it, but yeah, it's smooth.
Does it make you want to dance?
Makes my portfolio want to dance. Downward.
The music stopped. What's going on?
I'm trying to pick up the same call options on Credit Suisse that Skull bought earlier. But
No, don't pick them up now, my friend.
Wait,
No.
it's called you bought call options in Swiss?
Yes, I bought call options this morning for a penny a piece.
That's what I'm trying to buy them at. They're only at 2. And
Right,
it's still,
but I bought
it's
them at
not
1. It's a big gain, 100%.
That's what I'm trying to do is buy
That
them
is
at
a big
1.
gain.
It's
Listen,
exactly what
Skull's
I'm trying to
doing-
do is buy them
listen,
1.
Scald's doing something very specific that he knows enough to do. I would really suggest a lot of people not follow this one. It's something that Scald understands.
And also, I want to point out that I'm actually revenge trading because I had actually bought these when they were at 26 cents a piece, and I'm now revenge trading to make my money back, which is something I advise no one ever does. But I'm just doubling down. I'm like, fuck it, I'm going to make it back, and I am slowly, one contract at a time.
You gotta. That's the only way.
I think to George's point, he was trying to do the same Vega play. He just did it out in 2025. So I think he's George. If I'm not wrong, you're looking for the 1 penny play or the 2 penny play. A little bit short.
I have shares and I have the longest expiration leap pretty much for the lowest of the year. But no, I am now trying to do exactly what he was doing. They'll trade at one again.
I am.
You know, they'll trade at one again, but it makes me want to not get out of the position because that's pretty damn low. So.
But what? Yeah. Anyway, whatever. Cool.
George is the big boy. He can take care of himself. But I appreciate Brad's sentiment. He is right. Don't follow Skull. Not on this one, right?
I wouldn't recommend it.
You don't have
currently
to
hold
be in
shares.
every trade. That's all I'm saying.
I've been
You
in
don't
it
have
way
to do every trade.
longer before this whole thing, but I am down about 40% now.
So
Thank you, Brad. Sorry, Chocolate. What shares were you talking about there? I didn't hear what you said. You were down 40% on. You guys were simulcasting.
CX. Did you hear me?
Yeah, I did. Thank you. Sorry.
You got it.
I'm sorry.
Well, I think there's a lot of plays left in the banks. I'm going head to head with Loose because I got to put in JP Morgan on and it's today hasn't turned in my favor, but I still have a feeling that it might.
What's your thesis around the big banks on the downside, Georgia?
Yeah. Why puts on JP Morgan? Trying to wrap my head around that one.
I just when this banking crisis started, okay, it's my impression that it has to do with the ledgers of the bank and how things, not how much money they have, or not if they broke a rule, but how they balanced what they're supposed to have and their FDIC deposits for with what they're supposed to have, which made them out of compliance. And then the FDIC sort of learned about this, and that made it a headline. So I expect more headlines. I think the liquidity that's going to be pumped into the U.S. dollar, but for 3 months, I think this is about adjusting their ledgers. So I'm expecting more. I am expecting more banks, more tickers to trade. That's my take on what the situation is.
Well, I expect more banks too to follow suit, but all that money, all that depositors' money is going to move into the big banks.
Yeah, it's
That's
going
what
to
I'm
move into the
expecting.
big boys, not these little regionals.
So, well, I think that mostly that you're correct. If you want to get out a pair of tweezers and you want to minutely pick things apart, but I think what is going to happen is I think the relatively large investors are seeing the banks go down. I think the large investors of the planet. And I think they'll yank their money. And I think that they will do this to JP Morgan as well.
So basically, do you think that there will be a large scale impact on the banking sector, and because so many people might be overweight on JPM, or there might be very low volatility on it, that you would expect your puts to print as a result of just JPM trading in sympathy with the rest of it?
That is about it. I don't even really expect my strike to be made. I just expect the value of the put to go up because it's a
Interesting.
leap.
Interesting. That's an interesting
So
contrast.
yeah, essentially any disturbance in the banking industry, it will have will have an effect. Again, this isn't like this is going to be a long term. This is going to be a long term play. But for months and months, it would have printed every month for like the past 4 or 5 months. So
Are you trading a
there
spread,
you
or
go.
maybe
There's one.
like a
There's one for you.
yeah?
It's a decision based on really not wanting to pick apart all of the little banks and to see which ones are going to get me rich quick. You know, I'll just take I wasn't going to do an index, but I'll just do JP Morgan. It's not panning out well at the moment, but once again, it's not even lunchtime, is it? No. So, you know,
Would you do like a bear trade or make it a spread or something? I feel like it could be wise. Anyway, cool. Nice play.
Thanks, George. Appreciate that. Is anyone else buying into or shorting any of the banks as a play? Do you see any opportunities out there?
Yeah, I talked about this last week. I have about half of my portfolio in Fifth Third right now.
Sorry, guys, I need to go.
Damn, half your portfolio. Did you work for
Guys,
them or
I need to
something?
leave, so I'm gonna see you guys later.
See ya.
See you later, buddy.
See you, man.
I'm leaving.
Nice. Now we can talk about crypto. I mean, oh shit. Bye.
Yeah, I think it's a good quality regional. It's one of the larger ones, and like I think the area of the country that they serve is going to be pretty healthy through some economic issues in the market if they come to pass. I also think that people are fighting the last war here, so kind of making a rather large bet that this banking crisis will be contained, and I'm pretty comfortable with that assertion. They're pretty well run, and I started banking with them recently, and thought their products and their service are pretty good. So I expect them to do pretty well on the backside of this.
Wait, aren't you the one? Didn't they call you right after to tell you your deposits are fine? This has nothing to do with the other bank failures. Didn't they do? Was that you? Or was that someone else?
Yeah, they talked to me, but that was kind of just funny, wasn't it?
Yeah, like, again, it's their sales calls, and
yeah,
no. But
I
yeah,
remember.
I know about them, and yes, they their shares took a beating in the early aughts, but in the last few years, they've actually shown to be a better run company than they used to be. So,
Yeah.
thank you.
Yeah. So my mom works for another pretty large regional bank. Their loan book is a bit differently skewed than Fifth Third, and so I figure that there's some banks that are going to do relatively better than others in macroeconomic downturn. But I think Fifth Third is pretty well positioned. I live here in Florida and in the Tampa area, and there's a ton of these banks, and I think this particular area is quite strong as well. So some of the places that Fifth Third serves are pretty buoyant from an economic perspective. So I like them. Is anyone else playing regionals? Single names?
I mean, I was last week, man. I was in Wall. I looked at Fifth Third, but I figured they weren't as exposed to the contagion, being mostly Midwest based.
Yep.
This was talking about KeyBank for a while, but I don't think he ever went in. I think he was just hoping people had data that he was having trouble finding.
That bank sucks balls. They're so bad.
I mean, according to the data, that's also true. Someone said Solana is going to the moon, and I said the most stunning thing about that is that the Solana network's currently working. Anyway.
Vouch.
Other things in the chat. FRC to the moon? Question mark.
So last week I was talking to an E-Trade financial consultant, and since Morgan Stanley acquired E-Trade, he was telling me they're seeing a huge number of accounts being opened and transfer of assets requests coming into E-Trade, since now they have the branding of Morgan Stanley. And yeah, that's pretty much it.
Oh yeah, they're CEO DJs. Why wouldn't you want to have your money there?
Right. I just want to go back to what Georgia said. That's why he's right that it's going to affect all banks, but some banks it's going to be more affected than others as far as opportunity plays. In other words, Morgan Stanley stock is not going to go down as much as these regional banks that you can make money on.
Urban, you want to try again? I know you've been trying to chime in. I've had problem with my mic today too. I've had to get on and off stage a couple times.
Aren't you getting a new mic?
No, it's just my phone. I don't know why. I think it's the server today. I've had to do it at least 3 times. Yeah, see, I don't see him peeking there. He definitely wants to chime in. Sorry, buddy. Leave and try again. That's what I had to do, like 3 times. I even lead the actual call, not just the stage. So, anyhow.
Yeah, that happened to me too this morning.
Sorry, not tech support. Who else is up here? Anyone else got plays? Or anyone else have fears? Doing something in portfolio, hedging, selling? So everyone's going out for steak and bourbon tonight then? Everything's good? Good.
Hell yeah, dog. Everything's going
No,
great.
not at all.
Oh, shit. Let's hear from that person.
No, it's not that bad. I'm only down 4%. Just this rally doesn't make sense. I mean, Amazon's laying off 9K employees, but whatever. Let's ignore that.
Yeah, and their AWS, Twitch, and ads divisions. Yes, Amazon is laying off an additional 9,000 employees in the divisions I just mentioned. Leap and Leopard, thank you for that.
And their was actually
Wait,
down.
what were those divisions? Say that again.
AWS, ads, and Twitch.
When are the software engineers going to be laid off?
What? Probably never, but I don't think so.
Damn it.
FRC, First Republic Bank, is down 12.5%. My short positions are green. Hot damn, says Loose Ventures. Slut Spoiler says NEO is up 9.44%. Zebras asks, should we go long First Republic Bank for this week? Tough to know when the bottom is in, right? Maybe Daddy Buffett and a bunch of friends come in and rescue the heck out of it. Maybe it's the next bank to fail and it goes to zero. Hard to say. Someone said, what do you guys think about the bailouts for SVB and smaller banks? Yellen saying smaller banks won't be bailed out. But there's $2 trillion in the banking system. Well, here's what I think. I think bailing out depositors and banks doesn't per se create the moral hazard that we saw created in 07, 08, 09, because it's not really a bailout, right? It's more depositors that have money in the banks. And we're saying if you had your money in the bank, we're going to let you have money that you already earned. I don't see how that creates a moral hazard. It's not like they're bailing out the shareholders. I guess the only hazard created there is that banks might be more cavalier with their deposits, thinking that the Fed might sweep in and rescue them while the Treasury. Hopefully that doesn't happen. That would be really dumb.
You guys hear that eye roll? As soon as you said that, I'm like, oh God, Scald, you're too smart, and that's too scary.
Well, I literally just thought of it as I was speaking, and then the words came out of my mouth, and then I was like, oh, Jesus Christ.
That's the best stuff. That's my best work usually. You don't mean to. It just kind of comes out. You're like, what was that? Was that good? Oh shit, that was great.
Why
GameStop
don't you
had
think it's a bailout though? To me, it is a bailout because where does the money come from?
It's not a bailout. It's not. It's not how it is.
Well, I mean, it's not directly through taxpayers if that's what you're saying. Yes.
Right. And it's also not bailing out shareholders in the industry, it's bailing out depositors at the bank. So people that had money at the bank actually have their money. To me, that's not a bailout. That's the banking system working as intended. GameStop.
Okay, so let's say that's not a bailout. What about I don't know if any other future banks come into that situation because we both know they don't have that much money to continue. Like I think it's I think they have like 125 billion, right?
All the Fed has essentially done is said, hey, your FDIC insured accounts are indeed FDIC insured, and we will be covering anyone who has accounts there. What I don't know, though, and I don't know if anyone can clarify, I don't know if they extended that to foreign accounts, because FDIC doesn't cover foreign accounts. So I don't know if the Fed is extending that to foreign accounts as well.
I would think the main problem would be the first the the citizen accounts, right?
Yeah, but under normal FDIC rules, if it's a foreign account, they would just be like, sorry, you're not covered. So I don't know when the Fed came out and said, hey, we're covering these accounts and we're going to cover beyond what FDIC covers, if they also said, and foreign accounts as well. Because the overall purpose of it was to restore faith in the American banking system, right? Put your money in the banks, don't worry, the government will continue to protect you. Don't do a bank run, your money is safe here. So what I don't know the answer to is if they extended that to foreign investors as well, to say to them, and for foreign investors, also know your money is safe too. You don't need to start running on American banks.
For the FOMC meeting is this Wednesday, right?
Someone is posting that there was a $2.4 billion outflow from the New York Stock Exchange. Does that even move the needle? I mean, isn't
today?
Yeah, I mean, aren't there trillions? Like 20, 30 trillion? And they have equities on the New York Stock Exchange. What do we care about 2.4 billion? It's like a rounding error.
I'll just say this, Scald, don't bite with him. So anyhow.
All right. Fair enough. Moving on.
So, with the balance sheet increasing, I just wonder how Jay Powell is able to defend that with the FOMC meetings when they ask him the question.
Sure. I mean, he's going to say that they've done, precision work to make sure that the banking system has stayed afloat and there wasn't a bank run. And so far, it's been true. So they still have to fight the good fight, which is inflation. So they can kind of have two faucets going. Hardy used the water metaphor the other day. I liked. He kind of went off and said a funny joke too. But anyhow, they can do both at the same time. They can still raise rates, and God forbid something else happens, they still have other emergency facilities and other insurance, or not insurance, but other ways to mend any breaks on the back end.
But I mean, is that directly part of their mandate? They only have two mandates, which is inflation and unemployment. We have low unemployment now, but they just increased inflation.
They said that they would be able to fix any problems they create. That's early on. They said when we raise rates, people asked them if they were worried about breaking things, and they said, no, we could deal with that even easier that
I
we
mean,
can
come
deal
on,
with the
let's be real.
inflation.
You're saying they have all the solutions?
No, I'm saying that's their intent. That's what they intended to do. That's what their plan was.
And they have to keep price stability, and you better believe they have to keep the financial systems going. So that's why they have a lot more things to do than just those two mandates. They have the whole reverse repo market. There's lots of actions that they can take to help the overall financial system move if the dollars aren't flowing. So this is
I agree, but what's the cost? The cost is one of their mandates is increasing, right? So it's part of what's the priority here. Do they
I'm not saying,
prioritize their
trust me,
mandate or do they prioritize the financial system, like you said?
sure. So I think they can chew gum and walk at the same time, is what I'll say. They've done it wrong before. They definitely choked on it, but I give them more. I'm giving them a little more leeway. I don't think there's some great conspiracy theory or some. There's not inward fighting pressures. You know what I mean? They can do both. You just want to fight Jay Powell. I can feel it.
So we got some talk in here. Anybody along Joby? Job with a Y at the end, Jobby. Apparently, it's a vertical takeoff company. We've talked about EVTL on here before. So these are like personal air taxis or whatever. I don't know. Very speculative investment. Someone asked if Astrospace has any military contracts. I said, not to my knowledge. I said Astrospace is the trailer park of private space companies, and I personally love them for that. I do stand by Astrospace. I think it could easily go to zero, but at the same time, they are the cheapest of all the space companies that's traded. And I think if they do survive this depression, that there'll be some major ups there. But again, highly speculative, very, very dangerous. Yes. Naked Killer said Trump said his campaign is to invest in flying cars. Assuming that he's not arrested on Tuesday, I'm sure he'll be shilling private cars throughout his entire 2024 campaign, and those stocks will pump based on the news, and then I will leave them. Loose Venture said, do flying cars come with cup holders for your bleach? I hope so, as we know that's the only way to get rid of COVID.
So this will be highly anti-innovation, but personally, I hope we never get flying cars. I do not trust humanity with the Z-axis. I have seen the drivers on the road.
Yeah, I mean, they really loved your comments about the Z-axis, Rad. I thought it was pretty funny as well.
I'm glad. I thought that was just nerdy enough to hit the crowd.
I chuckled on mute.
To check to see if the mic is working this time, please.
Yep, we can hear you.
Thank you. I wanted to go back to George's play on the puts on the regionals. If you look at the math on that, there is about 19 trillion in depositors' money, 8.5 trillion in the Fed, and about 180 billion in the FDIC. Now, I found it interesting that the regional banks have asked for a 24-month full backstop on depositors. 4 months. So they know that this is going to take some time to shake out, and it's not just based off of the run. Going back to last week, I was asking if there are derivatives that are bet on corporate debt bubble. I was looking that up over the weekend, and I was watching that in correlation to AIG's stock play, stock price. Looking at AIG in 2007, going up to the 2008 crisis, and AIG again against the dead cat bounce today on AIG has been doing over the last 3 months. I'm seeing a correlation there. And I'm wondering who's holding the big bag of shit in corporate debt backed derivatives.
So your question is who is the next AIG? Like who's on the hook for the insurance of these products?
My thought is who's holding the regional bank corporate debt derivatives? What big bank has got the majority of those? Because I believe the reason that they're asking for 24 months of full backstop from the FDIC, which is clearly under collateralized to do so against depositors in the regionals, they know that it's going to be 24 months of shakeout here. I believe that the bets on the derivatives for that corporate debt, which is the bubble that I've made a point of all last week, is going to take place. When that happens, who's holding the CDOs or collateralized loan obligations, CLOs? What big bank, JP, or the majority of them, who's holding the CLOs that are over leveraged in corporate debt? And AIG is AIG. I think that that's why you're seeing, again, I think today's is a dead cat bounce.
So I mean, some of these are cleared through holding companies, like for example, here in the Midwest, HBNC Horizon Bancorp acts as a holding company that quote provides a range of financial services in basically Indiana, Illinois, Michigan, and Ohio between banks, right? I don't know if this is the exact kind of play we're talking about. You're talking about like some kind of big roll up, like eventually, shit rolls downhill and eventually it all lands on AIG, which is what happened in 0809, right? I don't know. I don't know the answer to that. I know that there are these intermediaries like Horizon Bancorp, ticker HBNC, that trade on a regional basis that act as like a holding company and clearinghouse between regional banks. So if the music stops while they're playing musical chairs, they could easily get the shaft, depending on what they're holding at that moment. But I don't know the full answer to your question. It's going to take some research.
Yeah. So, and to further that idea, and I think maybe a little bit more to your point, usually insurance companies are the largest bondholders. That's where real bond traders want to go and work usually anyhow, because they have very long dated streams of income and capital requirements for lots of different products and services. So just by default, your insurance companies usually are the largest holders. So I like where you're going. You could even take a list of, and again, I'm talking both mostly life insurers, but you do have the property and casualty and the specialty.
I can answer your question, by the way.
So, oh, sorry, you got. Hey, Luce, sorry.
Yes, I've been summoned. I've been summoned. Sorry, did I interrupt? Someone said cock.
Yeah. You could answer a quick question, and then you can beat us up after. No, I'm just kidding.
Go ahead.
So I work for a large. It's not like property insurance. It's dental insurance, and we do have bond holdings. Because we rent out a building, and with the profits that we make, we also buy investment grade bonds. And right now, I'm looking at our investment account for February. And just to answer your question, I think what you're saying is companies that specifically invest in any bond holdings in the financial companies. I think it's more of a mix. For example, we do have like Federal Farm Credit Bank that we do hold holdings, but again, these are held till maturity. And we don't personally buy this. We have a third-party investment manager or wealth manager that buys this for us, and we don't ask them any questions. They just buy it, and we hold it till maturity, and then they let go of some of the bonds, and then they reapply to new bonds, and then they just give us a statement every month of our current holdings. So the fluctuations regarding as corporate bond holdings, it does fluctuate with higher interest rates, but again, I would say most companies are like mine that just hold it till maturity, so it doesn't really affect us as much. We do have others. What's this? Federal Home Loan Bank, Fannie Mae CMOs at 2%. And these are bonds till like 2035, 2030 that I'm looking at. So yeah, as just to answer your Duke Energy, Progress, LLC, Johnson and Johnson. So some of these bonds 2028, 2029. Some of these bonds are just till they'll be enough time for us. I'm not sure if other insurance company does the same thing that we do, which is just holding till maturity.
All right, now, Luce, can you answer the question for real?
What do you? Oh, okay.
Wait,
You
sorry,
want me to take a
what was the
picture? I can take a
question?
picture.
No. Like, I understand what you're saying. You're answering a question that is correct in what you're saying. That's not what he's asking. What this guy was asking is who's actually
never mind.
holding the actual, like, the credit risk of these banks. Who is insuring the credit risk of the banks? Like, who is the modern AIG? You're talking
Oh,
about
my
corporate
bad.
bonds. I appreciate, like, the fact that you were accurate in what you said, but it's not what he was asking exactly.
Are you guys talking about the securities that are on balance sheets for banks? The ones that they're marking as held to maturity?
That's what he's talking
That's
about. I think
that's what I was talking about, but he's not talking about that, I guess.
Yeah. I mean, those would the other side of that would be the Fed.
I was going to say,
essentially.
Luce, if you don't mind, why don't you ask the question to Luce directly? See if he can go. He may be able to tell you.
Me? Yeah, the question I had about CLOs and the regionals and who's holding the insurance risk on that?
Yes, please. Yep.
Okay, in 2008, we saw the credit default swaps in the mortgage industry, and I made this point last week that a risky mortgage in 2008 is a standard small business loan in 2023. Say a 20-year amortization that balloons every 5. We have these rapid interest rates rising at the corporate debt level. So when these small businesses, which are 50% of the debt in this country, corporate debt in this country, and that's separate than the 60% of corporate debt that's held collateralized by real estate. This is strictly under collateralized corporate blue sky on receivables debt. So that's 50% of all corporate debt. So there are collateralized loan obligations as a derivative instrument that has these bundled in them. And then they are purchased by, I'm assuming, investment grade banks. These CLOs are purchased by investment grade banks. And then they are insured by AIG. I believe is still insuring some of these CLOs because I'm looking at AIG's stock price on the run up to 2008. Look at 2006, 2007 valuation of AIG, and then look at the last 3 months of valuation of AIG too, and where we're at today outside of today's dead cat bounce. So I'm thinking that short AIG is indicative of the issue that we're having of corporate debt being today's corporate debt being synonymous with real estate debt in 2008, and also who's holding what I feel to be the biggest bag of shit in CLOs at the investment bank level. Thank you.
Okay, so put briefly, who is holding the insurance on the CLOs, right?
Correct.
That's a good question. I don't know, like if there's, I mean, if if it was similar to the financial crisis, that would be pretty fucking stupid. Because a lot of it was, like you said, a lot of it was on AIG. So I think one thing, so it might be more diversified than it was then. That's my basic assumption. But I mean, I also had a basic assumption that you know, CEOs managing $250 billion banks aren't fucking retards. So I think it's changed a bit as far as how CLOs are structured now. So they would be priced more accurately these days. Whereas, you know, as you know, like back then, it was just everything was just had a solid rating, right? So I think now these days, the insurance companies that are insuring or whoever's insuring the CLOs, because it really doesn't just have to be straight big insurance companies, they are being compensated somewhat well for the risk that they're taking. You can sort of see it as probably like insurance companies that insure against like hurricanes. Like sure they're going to lose some money, but they're pricing that in. However, I wouldn't say so. To clarify, I'm not saying it's all priced in. It's all good to go. There are probably some companies that have excessive risk from the insurance side, but I wouldn't know. I honestly wouldn't know off the top of my head. But it is something worth looking into for sure.
Thanks, Luce. Thanks for everyone. Hey, Hardy, how are you? What do you
Everyone.
seeing, what do you see in the numbers this morning?
Which numbers?
Hopefully, the ones making us money.
You talking about home sales or something else? There's no economic news today, so I'm trying to understand what you're referring to.
I was just talking about the markets in general. Sorry, I'll be more precise next time.
Not much to report. I just sold another block of calls against GameStop. Taking advantage of the IB crush that I hope will come tomorrow.
Now we just need
finished
to
the Q&A
find.
on Reddit. Reddit decided to choke again, so I couldn't see all the questions going up.
You guys think natural gas is going to keep falling, or you think it'll turn around? I got a couple bullish negative divergence signals on the weekly period, so I was just kind of wondering what you guys think.
We need another cold snap to consume the supply of natural gas, and I don't know if that's going to come. We had false spring already here in New York.
Natural gas also has the one issue that I'm not going to say all the energy sources, but for most of the non-renewable energy sources, it's actually favorable and properly invested in compared to like an oil, which usually gets looped into natural gas. So it's not as supply constrained because companies are still seeking natural gas. Europe is still pro natural gas. So it's not an underinvested sector that's like having trouble finding supply.
Got it. That makes sense.
So, finding supply? Did you mean demand?
No, supply to meet increase. So in other words, when the Ukraine war happened and Europe was like, "Hey, we might have a natural gas problem," it was a sector that has been invested in over the years, so companies were able to come in and try to supply. That's why we had like that buildup of shipping outside of Europe, right? Whereas oil couldn't necessarily do that as easy, or other energy sources. Not that they can't. OPEC still has more supply that they can open. It's just not as invested in, if this is making sense, Hardy.
Yeah, I think I get what you're coming from.
Hopper and a couple other people. Sorry to keep bringing it up. Some people's mics haven't been working in the Discord server. You got to jump back off stage or even get out of the call, come back in. Sorry.
So I've done a little bit of research on this. It appears that for collateralized CLOs, that 71% of the CLOs are owned by the life insurance industry. And that number was trending upwards as of 2022 or as of 2021. So assumably that continued through 2022. Of the actual holders of it, it says that the 10 largest life insurance companies account for 41% of total CLO exposure.
I was on something. That's what I thought. They're usually bigger buyers and stuff. You don't want the you want the people. These are the people that are backholders, right?
Right. So that's what I'm trying to find out.
Well, it's both, because if you think about it, how it defaults, just like in the 2008 mortgage crisis, the first default
Yeah, no, I agree. Sorry, not to cut you off, but no, you're right. It is both, right? Sorry. You're right.
It's all where it falls in the food chain. The higher it falls in the food chain, the more people downstream are going to be affected, and that's why I keep hammering this point home about corporate debt. Because if somebody was willing to turn their keys in 2008 to their home, a small business owner, think about the guy going up and down a ladder to clean gutters, who's got a truck and and a ladder, and he's already spent that money, and he's going to go from a 3% debt on his corporate loan. It's going to balloon in 5 years if he gets a new set of.
Oh, we agree. No, we've heard it. No, we agree. Thank you. I sorry not to cut you off, but yes, we agree. That's why we're looking it up.
I don't mean to be loquacious.
So after that, it moves through there to private equity. So I guess the real thing would be finding somebody who's publicly traded, looking at also how the performance on the stress tests. What we'd really be looking for is someone who is holding C-rated CLO products, because that person has experienced a little bit of a fucky wucky recently, and is probably a good target to take some sort of short position against, or perhaps to just take a bearish position against them.
Yeah. And again, to my point earlier about how the life insurance companies usually are the biggest holders of it, these people are going to make mistakes too, to Luce's point. Doesn't matter if they're the biggest or they have them. Clearly, they have to have them on their books almost just because there's so few clientele of these kinds of debt, and they happen to always be the largest one. One of.
Sorry about that, guys. I had to leave to take a business call.
Luce, I'm not sure if your mic's working again.
Oh, it's working.
Oh, hello.
I think the focus was on the holders of the insurance of CLOs, but it sounds like we keep coming back to who's holding the CLOs, because I'm more interested in that. But I know a lot of these, they're going to be swaps. Like that part will be very similar to the Big Short. So I'm sure there'd be banks. I'm sure there'd be a lot of companies that are holding the swaps. They're OTC.
And could that be why the investment banks and Jamie's so happy to come in and put cash up to prevent this from happening?
Yeah, it could be. But I like to think that, again, I think it's a good way to word it. I like to think that people like Jamie Dimon, the big bank CEOs, know better this time than to just well, I mean, actually, J.P. Morgan wasn't that bad during the financial crisis, so I don't know. I
Yeah, but they
suppose they
ended up
wouldn't
with
lose a shit
Chase,
ton of money
right?
this time. What's that?
Didn't they end up with Chase as a result of that? Sort of like how Merrill Lynch and Bank of America got in bed together.
JP?
J.P. Morgan and Chase
Yeah.
weren't they separate entities prior to 2007?
Yeah.
So, how many more of these consolidations will occur, especially if the Fed decides to backstop all deposits and only at major banks?
Oh, I was talking about who's holding swaps on the CLOs.
And
I think that's what
be
the original point was.
right, and for a big bank to be able to see that kind of exposure, they would have to pretty much. I don't think they were driving off the hood ornament, but I just think it would be very difficult to see the losses on mark to market in the bond industry because of low interest rates for so long, and that's why the regionals are under collateralized.
What's a good podcast I can watch to sort of learn about all of this stuff?
That's the real question right there.
Are you looking for like deep dive or just kind of, quick hitters, like 5-10 minutes?
No, I want to know swaps and puts and spreads.
You just said like 3 completely different things.
Yeah.
I mean,
Yeah.
And you're
that's
not
a
going to
lot.
have access to swaps, my friend. Just going to put that out there.
Why is that? Is it like a what?
The
Are you a
collateral
bank?
required to end. No, the collateral required to enter a swap is in 7-figure range.
Yeah,
I mean, if we
exactly.
all put in $1,000, we can open one swap.
I see. So, any suggestions? Is there not like a good
Oh.
resource?
So, what was your name there? Avid. I hope we answered your question. I know it's a pretty deep dive before we go too far with mindless here.
Well-
I like your idea. I think it should be probably AIG, or I know it's not a direct thing, but my idea of who else holds it too, kind of the two-pronged idea. Who holds the insurance, or who's in charge of the piping, and who's holding the bag, right?
Right, and like 2 weeks ago, when I again, thanks as a newbie for having me up on the stage a lot. A week and a half ago, when this started to unfold, I came on and I asked a question regarding are there derivatives in the corporate debt market, and then all of last week asking questions and referencing this corporate debt bubble, and that's how I got here today. That I'm looking at both who's holding the bag of the CLOs and who's insuring that bag for the corporate debt bubble that clearly is here because the regionals are asking for a backstop from the FDIC to backstop 24 months of all deposits. When the FDIC has 180 billion, they're asking them to backstop $19 trillion in deposits, and that math doesn't work for me.
Anyone here work for a derivatives desk at a bank? You want to share some information? I'm just kidding. Nobody here
Who works at a
does a
derivatives
job like
desk?
that.
Yeah, I think that's a high bar.
I mean, getting on the desk isn't particularly difficult. They're always looking for janitors.
Janitors, yes. I'll clean the desk. I'll dust
What do you
them.
think about this? WallStreetBets VC fund.
Oh, yeah, nobody's ever presented that idea before.
Seriously?
Have you shaped
Yeah,
your
man.
stash?
Seriously.
Every
your
week,
stash yet?
dude.
Oh, I thought I was like really smart here. No? I was okay.
And
Who
it would
told you
be
that?
a hedge fund, not a VC fund. But yes.
You mean like only public markets?
What?
Yeah, why would we be investing in startups, bro? We're here to talk stocks.
Maximum ROI.
Hey, aren't you the guy that people voted off last week?
Yes, and I
No,
brought that up,
no.
and no one cared. Yeah,
I think
he's
he's
been
going for I think he's going for round 2.
It wasn't me.
Yes.
First
What
of all,
about
it
your
was
Oh
stash?
no, it was you.
Shape the stash. It was him.
guys. I don't feel very welcomed as a newbie.
You have to earn your welcome, okay? In the sub, you earn your welcome by having at least 69 karma. Here, you have to earn it by proving your usefulness. By posting memes.
How am I doing?
Oh, you're doing great. I don't know who that was.
Just another avid loser.
I see. Well, if there are new weapons being tested in Ukraine, optional trader, we don't know about it because that shit's going to be top secret.
Sancha says the bar needs to raised for who can speak. Some fucking idiots today. Come on up, Sancha. Enlighten us. What information do you have for us? Don't be
Let's
shy
bring him
now.
up. Bring him up.
Get him in here.
Where's that Sancha at?
Got him. Target acquired. Sancha.
There he is.
We are
Locked
fucking
in.
idiots, man.
All right, how about
Jeez,
this?
pieces.
I got a better idea. How about like an automated hedge fund, and all the bets.
Oh,
Like
mindless.
this
I'm
guy.
sorry. There was a vote. Yeah, you You were voted off the island. Sorry,
You
I catch
were
that.
voted off the island.
Yeah, I just now saw it. So yeah, sorry
Thank
about
you,
that.
Jeebus. Thank you,
People have
Jeebus.
spoken.
Sorry, I got excited. Thanks,
What
Luke.
does it take to start an ETF so we could do like an inverse Wall Street bets, the same way there's an inverse Kramer?
$135,000.
That's it.
That's it.
Well, the good news is the Wall Street WSB ticker does not appear to be taken, so we can do WSB and WSBQ for the inverse WSB ETF. Okay.
I was
So
thinking
that's,
last night we should all we should write a letter. I can write the letter if everyone likes. I can be the spokesperson. I don't mind. I don't mind the fame. That's fine. And we should write a letter to Mr. Fed and ask if they can bail Wall Street Bets out. We can all put our digital signatures on it because we've all lost a lot of money, right? So, I mean, who knows how much money Wall Street Bets has collectively lost? But I think we qualify for a bailout. I think we should write a letter to Mr. Fed and say, "Hey, we just as the other American people, good American people, we need a bailout. Please send money."
I need a
best they can
refund
do is
ASAP.
$1,800.
Opinion.
Well-
I think I'd like to make that post if that's okay, and if we could pin it, let Mr. Fed know.
Let's assume they give us $1 billion. That's $71.42 a person for everybody, for all of us. So not bad. I like your play.
But mindless investment, no, we have not voted you back on stage because I just swayed the votes in favor of keeping you off stage. So no. Plus, I think people are confused as to what you said. I don't think they're actually voting for you to come back on stage.
No, it's a no.
I do believe. Can someone, if someone would do me a favor and share the link for a Wendy's job application or mindless investment?
Hello. Why would I apply to Wendy's when I run a company?
Who brought you back up? Did this? That was opinion, wasn't it? Opinion is very good at stuff that isn't funny, so that was probably opinion.
Oh yeah, you missed the whole AI conversation. AI was asking him about.
Oh my god, I was cooking him. That guy got wrecked.
Yeah, don't let them
No,
steal
no, no,
your
no, no.
idea, mindless. Tell him.
He stumped you.
So what I
So
was
you're
saying is that 10 years ago, everyone thought there's no way AI could create art. It's just not possible. It's such a human thing, you know? Look at us today. We're in a position where the most beautiful.
Who did that deep sigh? That was beautiful. It was the sound of the soul leaving somebody's
That was
body.
me.
That was perfect.
Sorry, opinion keeps doing unfunny stuff, so I'm like trying really hard. It's like if we all piled into a hot air balloon and we could see the sights and everything's looking real nice, and then opinion like is turned off the flame, and then we're just like slowly dropping back down to the ground, but we're about to land like in the freeway. That's what opinion does for fun. Yeah, you'd prefer it to crash hard, wouldn't you?
We just. Well, I'm just gonna call it. It was. We like to call those hard landings. It's not crashes. It's just hard land.
Boo, boo. Good job.
Well, and
Good job.
Copper should talk again too. Our mics haven't been working. If we're gonna pile on while you're here.
What? No, forgive me. No, I was particularly what's the term? Colicky last night. So I'm still waking up. Anyway, having fun watching the banking world burn. Some of my former colleagues have reached out asking for referrals. Someone in the comments mentioned the Magic Merlin sleep sack. If I recall correctly, that thing is very well insulated, and we're approaching summer, and Noah sleeps hot. So unfortunately, I don't think it'll work on him. Also, Noah's 11 months, so I believe the Magic Merlin sleep sack is a good up to 9 months.
I'll just say this, Hardy. Better living through chemicals. If you need help, it's okay.
We're talking about why did Paul Krugman get a Nobel Prize in economics? I don't know. Guy's a fucking idiot. He does like undergraduate level econ work. And that someone said FRC IV crossover on this week's expiration. Interesting post. And Hardy, you weren't here for it, but I posted an RFX paper, but I DM'd you about it already, and I don't want to rehash it in the chat because it'll just be stupid.
All right, thank you. I think we mentioned earlier that ape or that Redditor who conducted a banking interview while assisted by ChatGPT.
Did he get the job?
Apparently.
Nice.
It's a banking job, so really
So you're saying there is
80%
a
of that
chance?
job. So 80% of banking jobs quite literally is copying and pasting in Excel.
That's how I feel about entry level programming jobs. But
Say a banking job?
wait, no.
If you're doing anything in banking, it's usually some form of Excel, shuffling Excel spreadsheets back and forth.
That's if you're like entry level.
Occasionally, you gotta push a mop around, but I mean, who doesn't?
If you're entry level, you're doing a lot of the bitch work. Once you get past that, probably half of your work is reading statements, legal documents, stuff like that, and then writing is comprises a good chunk of the rest.
That GPT can do both.
Yeah, I know somebody. Well, yes, it's writing and reading, but also I guess talking to clients, to existing clients. Like they give
Yeah, I
him a
don't
small portion of clients.
I don't think ChatGPT can cover like the specifics of investment banking and like
Find me a prospectus,
M&A.
Luce, and I'll run it through. Find a prospectus you want me to run through GPT-4. I got access to the API last night, and we'll let it
What
summarize
do
for
you
everybody here.
makes it make it sound overly simplistic? It's not.
Oh,
There
it's
isn't a one
absolutely
size
going to
fits
be
all.
I agree it's not one size fits all, but let's just say the bar for understanding has dropped considerably with the help of GPT-4.
I think ChatGPT is something that could help, but I don't think it replaces sales and banking, like investment banking. It can help read
Mindless
through legal statements,
investment.
stuff like that. But I mean, yeah, so many deals that I saw that just they really weren't that simple. Like every single deal was different. Just like the how risk looks at deals, how deals need to be secured. Like there's so many nuances. I don't know how like ChatGPT would be able to. At the end of the day, it's like okay, approval. It doesn't come because like a few boxes were checked. It comes because of there are like a lot of reasons.
You sound like you were more oil and gas M&A.
No, actually,
Like
but
what desk or what kind of banking did you mop for?
well, it was commodities in general, but I've also opted for private equity for some years now. So,
Okay.
yeah, it's
So
so much of it is
so let me
like the
get this
numbers are
straight.
easy. The numbers in the check boxes, those are easy, but like it's all the other stuff that needs to be discussed and needs to be agreed upon, and then the legal crap that comprises a good amount. But to say like, how are we going to structure this deal, and how are we going to put that in the legal document? GPT could help, but it's all like, okay, what makes us feel better about this deal?
So you think that
Very subjective, in other words.
the state of the art AI can
Fucking
process and write some of the most complex code on earth, but it can't read a banking document?
Well,
Is that what you're saying?
we can speculate all we want. The reality is the API is available to us today, so we can experiment and see to what extent it really properly understands a pro forma or prospectus or a deal.
Let's do it.
What I'm saying is whether a deal gets approved or not is subjective. It's like 95% of the time it's subjective. That's why you have bankers. That's why you have sales. You don't
What do you mean?
need to have AI. Think about it. What you're saying is like everything can be quantified. If that was the case, then we wouldn't need sales. That's the whole
We
point.
won't need cells. That's what you need to
Why are you
like.
back?
No, but just listen.
Oh,
Isn't
I think we need
art
another vote.
subjective? Art is subjective.
Hey, art is subjective, okay?
Conversation got dumb real quick. All right, he's gone.
All right.
Anyhow,
If
one
it
one
were
one quick thing.
So, Hardy, have you had your access cut down though in number of tokens? Because I was paying for the premium and then they cut us down to like
I'm paying
0
for the
tokens.
API directly,
Oh
not the
Jesus!
GPT Plus.
Now I got to
So
get on that wait list.
I've taken some of your capacity.
That's fine.
But
I'm
to be
miffed
fair,
about it.
running the biggest model, the 16K model, costs $3 per prompt on the API. So imagine trying to run that model on the $20 a month program. Doesn't work. So I understand where they're coming from, and I have no trouble paying, doing the pay-as-you-go option.
Yeah, I have no problem with that either. And I mean, they did onboard the entire country of India, so you've got like 1.1 billion people asking it dumbass questions like, how do you bake a cake? When it's like, please just Google that. Do not ask the AI. Jesus Christ.
Oh. Also, who's the guy who, what's it called, keeps talking about the hard ASMR? Can't you just play my talk on loop? Wouldn't that help? or any of the AMAs I
I think he
posted,
got
put
bored
those
of
on
it.
Loot.
He already does.
I'm kind of liking GME's price motion right now.
Yeah, I've sold some. I sold a bunch of calls against GME in anticipation of the nothing burger that is earnings. Ah. Something soothing? Okay, here's something soothing for you. MOAS is always tomorrow.
I mean, don't lie to them.
Oh man.
I said soothing. I didn't say truthful. The way I see it, the introduction of AI will do what the introduction of the telephone did to the telegraph industry. It won't be long before we have the current generation's call center workers becoming prompt engineers.
And even then, I think there will still be major changes. There will be like the higher end prompt engineers that actually know what they're doing with it. And then they will create the prompts that then the lower end prompt engineers will just run.
Yeah, it's no different from how Excel spreadsheets are done. You've got the people who make the templates and the people who use them.
I mean,
Big true.
With AI as well, I mean, you're always going to have the situation where people want to deal with people. That's always going to be it's always going to be a matter. Like I just said in the chat, you can't like quantify interpersonal like relations with people, and it's just
funny you
completely
say that.
different.
That's how I built my career, automating people out of work.
Yeah. Well, and to Luce's point earlier, and I've got two quick little points on it. Yeah, you're always going to have deals that have to have that interpersonal touch. And for anyone who's ever seen the movie Fifth Element, when the priest or whatever is sitting at the station and the bartender's like, "You want some more?" There's just some things that are not going to feel the same. You don't want a prompt therapist. You don't want a prompt bartender. You always are going to have some of that human touch element.
Wasn't there an AI dating app called Replica where you could have a significant other into which you confide?
I believe it was. I'm not sure the name, but yes, you could have the
My
conversation.
point is, people have already been replacing other people with this automaton. It's natural sounding enough that they can confide in it like a significant other.
Don't dox
Yeah.
yourself, Harvey. I'm not ready
I
to know
mean,
you.
I mean, I understand with like kind of lower skill work. Yeah, of course it's going to replace it, but there's a lot of, as you said, like therapists and much more interpersonal things, and obviously when it comes to actually striking the deal, there's always going to be a discussion between generally two people, or two groups of people. So at the end of the road.
The end of the road.
I've got a play if interested.
Yes, we always welcome plays.
Okay, in March of 2020, March 23rd of 2020, we had lows in Grow Price, Ben Franklin, and AIG. Today, T Rowe is up since that 2020, March 23rd, 9%. Ben Franklin is 35%, and AIG is 49%. Due to the fact that we're looking at maybe 24 months of banking issues, I was looking to short those three stocks, and I'm looking for the best opportunity for an options play to cover against those three. Any recommendations?
I'm not sure that's a viable possibility, at least right now, while banking IV is still high. Do you anticipate the window of opportunity closing in the near future?
I think that they're definitely going to hit the lows of March 23rd of 2020, and I think they're going to hit it within 12 months. Was because again, the fact that the regionals have asking for FDIC insurance to be spread out for 24 months at 100%. That's saying that there's going to be bumpiness on the downside sector. So looking to have a protected investment in against those three, with AIG potentially going down 5 to 40%, Ben going down 20 to 30, and T Rowe giving up its gains at 9%.